Here we go. Let me share my screen. There you go. You should be able to see me, and you should be able to see me. We want to spend more time spending our trading profits. Want to be spending far less time looking for them. You know, I was trying to think, what is it that we're all trying to do? I can see got people from Aberdeen, from Canada. Wonderful. That is fantastic. Got people from all around the world, Australia, Stanford. This is fantastic. Great. Okay. And I've got a few tricks up my sleeve. Let's start the first poll. Right, here we go. You should be able to see a poll which says, will the FTSE be higher by the end of 2020? I want your answers on that one as well. Look, this is what today's about. It's about spending time on making sure we're earning those profits. We want to really cut back the time we spend trying to find them. All right. Now, as you're all settling in, you know, grab a drink, comfortable seat, pen and paper. Let's just, as you're all coming through the rooms, you know, some people are a bit late getting here. Let me just tell you the best books. Okay. If you're thinking about what should you read in the new year, these are my most favorite books. Flash Boys is about hyper-fast trading. Okay, this book, The Man Who Solved the Markets, this is a bit more about what we do in my hedge fund. It's about algorithms. It's about how they are now taking over the markets. This man has made more in profits than Warren Buffett. Okay, but guess what? He only started when he was about 50 tackling the markets. Up until then, he was just doing maths, hadn't done the markets before. New Tycoons is about private equity, which is also what my asset management company does. The Undoing Project is about trading and psychology. When I wrote my column in the Financial Times, I used to write about the 2 Nobel Prize winners before they got the Nobel Prize, who are mentioned in this book, The Undoing Project. Highly recommend it. Buy Side is about just what happens when you've got way too much money from trading. Dark pools, another area of trading, which if you're really into it, it'll be good for you. The quants, again, quantitative trading algorithms, what we're talking about now, how trading has evolved. It's no longer about technical analysis and charting and trading around the news and, oh, here's a support, here's a resistance, here's a head and shoulders pattern. That is so blown out of the water by modern technology. It's like somebody saying, Albish, can you teach me how to use a dial-up phone in the era of smartphones? You know, it's so ridiculous what's being sort of fed out there. And Range, phenomenal book. It's about how generalists, people who, like me, who are lawyers, go into trading and end up owning hedge funds. In other words, the experts in certain fields are not needed. What's needed is to know what it is that's important and remove all the other nonsense. And that's what we're going to do in this webinar. And Range is about the fact that, you know, you hear about diversity of experience and education and how that's important for success in certain careers. Well, trading is one of them. Not surgery. For surgery, you better have 20 years of medical training. But for trading, you shouldn't. You should actually have Range, and that's what this book's about. Anyway, now that you've all settled in, and I've told you my best books for next year, what about the best products? I mean, we're diving deep into all of this, okay? We're diving straight into this. The best products, momentum for trend following in 2020. Well, you know, out there, did you know there's 300 Forex pairs? Did you know there's over 60 global indices that you can trade? There's over 90 commodities. There's 9,000 shares in ETFs, 15 cryptocurrencies, all of this. There is no way on any time frame at any given time you and I are going to be trading the same stuff. Okay, it's just not going to happen. Statistically, look at this. Okay, so what are my favorites for next year? And I'm going to tell you those in just 1 second. Before I do that, I'm going to end this poll. 60% of you think the FTSE will be higher by 2020, and 19% think no. 19% also say they are not sure. I'm going to end that poll for a second. Okay, I'm going to share those results. You should be able to see them. 61% think it's going to be higher next year. I think you're right. But that's not how we're going to trade. We're going to look at trading in a second. Chat. Dan says it keeps cutting and going silent. Hopefully you're recording. Dan, it might be your computer system. Make sure nobody in your family and your household is using Netflix or using your broadband. Okay, that's usually the problem. Sylvain from Canada, welcome. We've got somebody from Kenya. Kenneth from Kenya, welcome indeed. Okay, and Noel, I'm delighted. Melbourne, Australia, beautiful Melbourne. Hope your country's doing okay with, I know, the heat wave and all the rest of it. So which are the products I'm going to focus on in 2020 and why? And these are not exclusive. I'm just saying, I think these are the ones I'm going to go for. Now, during the course of the year, I might change which ones I focus on, and I'm going to show you how to keep up to date with me through. I'm going to have a free app which you can look at and see what I'm doing every day as well. I'll show you all of that later. But at the moment, going into 2020, these are the ones I think are going to give me the smoothest trends. Why? Well, it's based partly on experience, it's based on expertise, it's based on a whole host of things. You don't need to know what those are. Now, how can you get an image of that? Well, for a start, you could always take a picture, my friends. You could always take a picture, couldn't you? Okay, if you're really into it, that's one way to do it. You could take an image. I'm going to see actually if I can just take that picture for you. What happens if I take this picture and let me move this out of the way. Okay, I'm going to let you have that one, but you could save this in any event, all right? And I'm going to share that file with you. I'm going to see if I can share that file with you. Can you believe it? The most trending products, okay? We're going to call it trending, and I'm going to upload it right now. See if I can be a real smart ass and do that. And if I can't, I'm not going to. But don't worry, I'm going to make sure it gets to you in any event. And see if this is it. I think this is the one. I'm going to try and send that to you, that file. And what the whole point of all this is, this kind of sort of sharing this kind of information with you guys, and you should hopefully be able to get that file. I'm sharing it right now anyway with you. Is that, you know, or just take a screenshot with a camera phone. But I'll make sure you got these slides and this information. Is the reason I think these are going to be the easiest things to trade. Like I said, a whole bunch of experience, expertise, and what worked really well for us in 2019 as well. So, you know, and I've got no reason that won't continue. Now, how are we going to trade this? That's the next thing, okay? There's still a whole load of things to answer there. How are we going to trade it, okay? Fred, the answer is yes. B says, keeps coming and going. My server is fine, just so you know. No, I understand you're not complaining, B. I will make sure that if there's a problem, I'll make sure we use a different system next time. Really sorry if it keeps coming and going. It shouldn't really do that. I was promised by the company which is providing this technology that, hey, this is a new upgrade and all the rest of it. It might be that it's not a case, okay? And for the books on the slide, somebody just said the books. Look, guys, get your camera phones ready. If you haven't got a camera phone, get a proper phone. There's a picture. But I'll make sure after the webinar you've got access to all of this anyway. I'll make sure everybody's got an access to all of this. So don't worry, because you don't need to take notes of detailed information like that, especially when you've got things like this and you might not have any camera phone. But I'll make sure I send you all of this as well. Sarah, Carolyn, Fred, okay? The top UK stocks for 2020, 12-month holdings. There we go. These are the ones which for 12 months I think are going to be the best ones for next year. Now you can hold my feet to the fire for it if you want, and I don't have any problems people doing that because I've been doing this for years and years and years, and you'll see me often commentate on these things on the BBC. I will put that in front of 300 million people and put my reputation at stake as well. Okay, time and time and time again. And so I don't have a problem with that, because time and time again I found when I put my reputation on the line, I'm good at it, and therefore I get asked over and over again, okay, because I'm good at what I do and I'm pretty accurate. So those are the ones based on my value growth ratings for 12 months, right? Now, that's not what this webinar is about. This webinar is about making money of the short-term trading, all right? Hey, Raj from Paris, wonderful. And you've written in Gujarati as well. I'm seriously impressed, my friend. Okay, now you also want to know the year ahead Goldman Sachs conviction list, all right? You want to know the Goldman Sachs conviction list? I'm going to give that to you right now. I'm going to send it to you as a file. Okay, we're going to call it Goldman's, right? Can you believe it? Don't worry, even if you don't get it now, for some reason you can't get it whilst we're on the webinar, I am going to make sure that you also get it after the webinar. So I don't want anybody at any point to think, hey, Alpesh, what the heck, man? I didn't get it in the... So this year ahead, 2020, this is what Goldman Sachs have said that they're going to want to give to people, all right? As in, this is the best and brightest ideas they've given to their wealthiest clients. Let me say that again. The best and brightest ideas to their wealthiest clients. If for some reason you can't get it, look, there's a WhatsApp number. You can WhatsApp me. Yeah, I know what you're thinking. What? Who the heck is that personal? I want to make sure I am the most authentic, personal, one-to-one trading provider you have ever come across. no strings attached. Look, you've got it there. And if you can't get this list through the webinar that I've just given you, it's available for free on that website as well. Did I say that? Did I just say free? Hell yeah. Merry Christmas, people. Okay. And the reason I'm doing this is, you know, you got to prove to people you're the real deal. And that's the reason why. Okay. Fred, I'll come to that in a second. What a question. Top 10 UK stocks. In case you're wondering, well, Albert, you gave us your UK stocks. How good are you? How good are you? Well, here's some independent monitoring of me done by a Financial Times awardee software company. This is it. They've been monitoring me since 2004. I don't mean back testing. I mean since 2004. I'm talking for 17 years now, or whatever that is. 16 years now they've been back. And how I turned 10,000 into $250,000 by 2016 alone. And since then, as you know, the market's gone up and up and up. And it's gone through the roof. But my point is, in case you want to know how do my 12-month holdings do each year, here's an independent third party. There it is, ShareScope. There's the URL. You can see it there on screen. Let me zoom in. Okay, and they've won awards from the Financial Times, So you can't get more credibility than that. Financial Times have awarded them their Best Investment Wealth Management Awards in 2019 again, and they've been monitoring my performance since 2004, and you'll see it on their website. This is an image from their website referring to me and how I've done. Okay, I can't do better than that. All right, I can't do better than that. Ash says no sound. You should all still have sound, I hope, my friends. I hope you all have got sound. I've got no problems with my sound, so let me know if there's any issues. Okay, so just in case you're wondering, when I give you these names that I gave you earlier, my top UK stocks of 2020, based on my value growth algorithm, this is for 12-month holdings, what does it mean? Well, how good are you, Alpesh? How do we know you're any good, man? Well, here's independent verification from a Financial Times awardee company, independent third party, who've been tracking me since 2004. Nobody comes close to my credentials. Now, I'm not saying that to sound smug. The reason is because of the internet, there's so much bullshit out there that you've got to shout louder than the other people. You've got to show your credentials. You've got to show your source of material so people know you're not fake news. And I can't do better than Financial Times and independent third parties. Okay. Similarly, which are my top US stocks of 2020 for a 12-month holding? Here they are. Okay. Disclosure, full disclosure, I've already bought AES, and I bought them some months ago. The others I haven't bought before this webinar. I fully hold, reserve my rights to buy these as soon as the webinar is over, okay? So just so you know, full disclosure. To be honest, my buying them is not going to move the price, all right? Just so you know, because these are massive companies. AES, I already own. Full disclosure. I want everybody to know, full disclosure. I don't want people to say, oh, he's pumping up his own stocks. Okay, so take an image of those. Anything you've not taken an image of, don't worry. I will make sure I give you ample time to, I will send you these after the webinar. Okay, another poll. Will the Dow be up by year end? By year end, I mean 2020, okay? 2020 year end. Here's another poll. Let me know your thoughts. You should be able to see the poll. It should be, I think there's a red box with 3 white dots either over there or over here. I forget which side it's on, mirror reflections and all that. So you should be able to see that. Now let's get on with it. Let's get on with the next thing. Like I said, I want to try and teach you everything I know in 60 minutes. I've set myself a Guinness Book of Records. Let's work out what your problems are with trading, okay, when it comes to making money. Problem number one, and we all want to make, look, you might want to make an extra 1,000 a month, an extra 10,000 a year, whatever it is. And if you learn the skills to make that, you've got the skills to become a billionaire, because it's just about scale. Well, it's just about scale after that. So what is it? How do we do it? Problem number one is this. You don't know when to buy and sell. Okay, and you don't know what to buy and sell. So I'm going to try and solve that problem. You're banging your head against the wall because you don't know what to buy and sell, and you don't know when. You don't know whether it should be Google. You look at a chart like this and you think to yourself, oh, should I sell it because it's been falling, or should I buy it because it's going to go up? You don't know what to do. And when it comes to trading, you've only got 2 decisions to make: when to buy, when to sell. And that's the difference between winners and losers, rich people, poor people. So I'm going to show you in a second what we're buying and selling. I'm going to show you what you should, how you should decide. Okay, related to that problem, I call it problem 1A. Only 25% make money. Only 25% make money. This is a warning sign from a brokerage. Now, whether this is spread betting, CFDs, futures, I know there's some people here who in their country can't spread bet. They might be doing CFDs, they might be doing futures. This webinar's for all of you. It says spread bets and CFDs are complex instruments, come with high risk of losing money due to leverage. 75% of retail investors' accounts lose money when spread betting and or trading CFDs with this provider. It doesn't matter which brokerage this is, but 75%, they have to by law now tell you how many of their clients are losing money. 75% are losing money. 75% are losing money. How do we get you in the 25%? That's the problem. Only 25% are making money. How do we get you into that 25% who are making money? That's our job, okay? That's my job. Now, problem number 2, you don't know how much money to put into a trade. Because sometimes you put too little and you think, oh, I wish I put more in. Sometimes you put too much and you think, oh my God, I've just lost half my account. And if you lose half your account, then what you're left with, you've got to get 100% return just to get back to break even. That's a pain in the ass, isn't it? Okay, so you don't know how much money to put into a trade. Let's say you're looking at something like this, which happens to be the FTSE, and that green arrow there, the green arrow shows when to buy. And I'll explain how we get all of this in a second. And the yellow line shows the stop loss. You don't know. If that stop loss gets hit, how much money should you put in the trade? How much should you risk losing of your total capital? How much money can you start off with? What's the smallest amount you should start off with? What's the most you can make, depending on how much you put in? I'm going to answer all of those questions in this webinar. And the reason I'm doing it super fast is because I want to give you all my knowledge in 60 minutes. Okay, so it sometimes feels like this. You know, you're walking on a tightrope. Imagine you're standing there. Imagine you're looking at that trade at this point. Imagine you're a person walking that trade. It looks like you're looking down and you're thinking, shit, have I put too much money in? In other words, am I too far off the ground? I'm going to break my legs. Or have I not put enough in? So it's just like such a small jump. Okay, so you need to know how much to put in. I'm going to give you a precise formula, and I'm going to give you a business plan based upon that formula. The other problem you have, problem number 3 we're going to solve today, is you have little capital. So you don't want to be paying subscriptions, paying tutors, paying for software, but yet you still have high hopes because you've got small capital. So how much can you expect to make based on the capital you have? I'm going to go through that. I'm going to give you a formula today, which tells you how much you should reasonably be able to make, and then you can tweak the risk. And you can say, oh, I'm willing to take a bit more risk, trade a bit more frequently, and I can make a bit more money. Or, whoa, let's slide it down, increase the money, trade a bit less frequently. How much does that leave me with? We're going to have to do a little sort of juggle and work out what suits you, bespoke to your returns and the gains you might want. Will the Dow be up by the end of 2020? Yes, 58%. Well, I'm saying the majority have it. The majority are yay, and the majority have it. Okay, right. So let's move on to the next problem we're going to be solving for you guys. Okay, next problem is this. Problem number 4. Time is precious. You do not want to be a screen slave, and this is probably one of the most difficult problems people have. They think they've got to be screen slaves because they're sold on this dream that if you're a trader, you're stuck in front of your screen all day. It's not true. Do you think any of us? Well, first of all, Goldman Sachs don't make you work 24 hours a day. The first thing. My hedge fund does not make my staff work 24 hours a day, although they're in the office because the boss is in the office, but that's a separate issue. All right, and I do not sit around looking at my trading screens all day because I can get 18-year-olds to do it. Right, what I spend as CEO trying to do all the time is grow the business by speaking to pension funds to get more assets under management. We've only got, in the last 10 years since I launched the fund, actually it's more 10, it's already 16 years. We're only at 100 million euros, from 0 to 100 million euros. I didn't think it'd take 16 years. I thought I'd be at $1 billion. We all have dreams. Okay. I hope in the next 10 years, I'll get to $1 billion of assets under management. Guess what? I go in after Goldman Sachs and before Morgan Stanley, and they soak up the capital because they go, hey, Alpesh, yeah, we see you on TV and stuff. Hey, you're good. You won that FT competition, but we're going to give our money to Goldman Sachs. Even though they give less returns than you do, they're big. Nobody lost their jobs buying IBM, basically. Anyway, so what I'm saying is time is precious. My job is to go around raising capital. Your job is not to be sitting in front of a computer screen in the middle of the night watching trading screens. You should be playing with your grandkids or something. Okay, so we've got to solve that problem. Okay, if we don't solve these problems, you're never going to become traders. You're never going to make money. It's as simple as that. It's about all of these, okay? Now, problem 5, you don't know who to trust. You know why? Look at the internet. These are just some of the images I found today from trading tutors. Oh my God. Listen to me carefully, people. If they are not regulated money managers, I don't mean regulated to write newsletters. You can be regulated by the FCA to write bloody newsletters. Okay? If they're not regulated money managers, it's like saying to somebody, oh, you don't have a doctor's license, but would you do an appendectomy on me? Oh, would you do some brain surgery on me, but you're not a medic? right? It's like that. Oh, you treat me to drive a car, but you don't know how to drive yourself. You just read a lot of books and talk about it a lot. This is the kind of BS that's out there on the internet. So don't trust any of it. I have yet to find one regulated hedge fund manager which is talking to private investors the way I am. And you might say, well, why are you talking to us? Guess what? I was a private investor. I've written in the Financial Times before I became a hedge fund manager as a private investor, my Diary of an Internet Trader. So everything I'm giving you now has already been in the public domain, published by the Financial Times, published by Bloomberg TV. Gave me my own TV show for 5 years before I set up my hedge fund. And so I had to stop the TV show to do my hedge fund. Okay, so I'm a private investor first and foremost, then a fund manager. There is not a single one. There's a couple of people out there, one's male, one's female, I've noticed, who claim to be hedge fund managers, and you look on the regulatory register and they're not there. They're bullshitting and lying, basically. So just be really careful. I've not found a single one in the world, regulated hedge fund manager, who speaks to private investors. And that's fine, because why should they? Why should they? They probably haven't come up from being private investors to being regulated fund managers. If they're any good, they're going to be given money, like I was, by institutions, and therefore become fund managers. If they're no good, they're going to end up just teaching all the time, okay? So let me ask you a question. What's your 2020 goal? Let's say your 2020 goal is to make an extra £10,000 or $10,000, wherever you are in the world. I know you've got some Australians here. I know we've got some Canadians, okay? Let's say, for argument's sake, let's say it's to make an extra £10,000. Right, let's do a little business plan for you. Let's say that's your goal, that's your New Year's resolution. Nothing wrong with it. All right, nothing wrong with it. And by the way, I'm going to show you trades in a second. I'm going to show you, for instance, in case any of you are wondering where the live trades, dude. Okay, this is sterling New Zealand dollar. Don't worry, I'm going to show you which ones, what I like, why, what we've got open at the moment, what time frames, all the rest of it, live, real time. Don't worry. But let's go through that business plan first of all. Right? Let's say it's this. To make £10,000, what do you need to do? Or $10,000 US or whatever else, okay? Before I do that, Naren, if it's to make 100,000, you're just going to multiply everything I tell you by, or you're going to tweak it a bit, all right? To make 100, it doesn't matter. If it's just to make 1,000, you'll reduce everything by 10%, right? Now, before I do that, will the Dow be up? Let me reset that poll. Okay? And we'll do a few more polls in a second, right? To make 10,000, what do you need to do? Imagine you did one trade. Just imagine you do one trade. Let's break it down. Let's really break it down, people. Imagine you make £120 on that trade, for argument's sake, all right? To make that £120, you risked losing £80 because you saw where the stop loss was, and I'll show you through my system or your system how we're going to find where we put our stop loss or whatever, okay? So let's say you did a risk of £80, right, to make 120, and we'll work out our strategy afterwards. So first we work out our goal, then we work backwards to our strategy to get to there, okay? Like anything else, you work out your destination first, then you plot a course to it. All right. If you don't know where your destination is, how do you plot a course? Right. So we'll do the strategy bit second. We do the business plan first. That's where people go wrong. All right. So now, which, if you have £1,000 of capital, is about 8% risk. That's what it is. If you have £1,000 of capital, all you have in the world, that's 8% risk. But if you have £5,000 in capital, or $5,000 US, that's 1.6% in risk. Okay. Now, imagine you win 60% of your trades. Let's say you're going to do more than one trade. You're going to do 100 trades, and 60% of those are winning, right? Why? Well, a coin is 50-50, so you're going to be a bit better than a coin because you've got a strategy which is a little bit better than a coin. Not much. You're not one of those who claims to be like those internet fools who want to charge you thousands and say, oh, I'm right 93% of the time. I'm right 90% of the time. I got a secret system. Yeah, that's why you're on the internet, mate. If you had a secret system, you'd be a regulated fund manager, sunshine, okay? So bullshit. Right? No, let's say you're winning slightly more than 50. I've written this in my FT column. I've said it in my Bloomberg show. I've written it in my books. All right? I've gone through the maths of it, and I've explained, you know, the reality of the situation as a fund manager. Imagine you win 60% of trades, you lose 40%. What happens? Right? Now, if you do one trade a day or 5 in a week, you don't have to do one a day. You could do all 5 on a Friday or on a Monday or on Tuesday, whatever, okay? Let's say you're therefore doing about 250 in a year, approximately. Just bear with me on these numbers, right? 250 times 60% times £120 means you're making £18,000 in profits on your winning trades, the 60% of trades that are winning, and you're losing £8,000, okay? That gets you to your £10,000. You say, well, okay, that's very fine. I'll pressure it on the back of an envelope. How do we get to those numbers? How do you get to those numbers? What if I want to make more than £10,000? Well, if you want to make more than £10,000, several things you might do. Okay, you won't try and be right more than 60%. That's not the thing to try and do. This is where people go wrong, right? Listen to me carefully. That is not where you're going to try and be right. Okay, there's a whole host of reasons why. What you could try and do is get more capital. Hey, if you're making these kind of numbers, you're going to get friends and family who say, I'll give you more capital. That's one way to do it. You might do more than 5 trades a week or 1 trade a day. You might do 2 trades a day. That'll double the numbers. Okay, if you have more capital, right, you could even ease back a bit on the risk and still get closer to making more than £10,000. Now, we'll come back to this business plan, but that gives you some idea. Okay, Alpesh, I understand. Now what I've got to try and do is get a strategy which is going to get me right a bit more than a coin. I need one which is going to make me roughly, when I'm right, £120, more money than when I'm wrong. And I've got to make sure I don't lose more than £80. I've got to make sure when I'm wrong, I get the hell out of there. And when I'm right, I've got to make sure I'm making more than £80. So I've got to look into that. So we're going to now devise a strategy to help us achieve these goals. Okay, do you see how we're doing it? We're going to go back to forward. That's what we're going to do. So let me ask you a question. What's your 2020 goal? Let's say it's £10,000. We're going to tweak this. Some of you will say, Alpesh, no, my goal is going to be to make 5,000 or to make 1,000. Well, we'll just play with these numbers till we get there, right? That's the point. Now we've got the starting point. So how are we going to do it? Let me ask you that same question. What's the daily routine then? We're going to have, if you're going to have a plan for 2020, you're going to need a daily routine. This is my suggested routine for you. 15 minutes a day before and after work, I want you to scan a bunch of instruments. You can see them on the screen. Okay, you can see them on the screen. I'm going to show you how to set up the screen. All this data is live, real time, and free. Many brokers offer it, so it's broker independent. Your strategy or mine. Now, if you've already got a strategy, great. I'm just professionalizing you. If you don't, I'll give you one. All right. Stops. You're going to need to know where to put that stop loss so you don't lose more than £80 on a trade. Entry. So you're going to need to know, how do you know when to buy or when to sell short, and how much money to put on a trade so you only lose £80 if you're wrong. Okay, and we're going to do 1 trade a day. That's what it's going to be to start off with. Now, like I said, if your ambitions are to make more than 10K, you're going to do more than 1 trade a day. That's perfectly fine. If it's to make more than 10K, you might therefore need to be in front of the computer more than 15 minutes before and after. You might double it and do 2 trades a day and say, well, I'm going to be in front of the computer 30 minutes a day before and after work, which is 1 hour in total. I'm going to do 2 trades a day. I'm going to try and get 20 grand. Instead, you see what I'm saying? We've now got a process. We've got a business plan. The makings of a business plan where it's like you can move one thing up, something goes down. You see how you're designing it bit by bit? And why am I going so fast? Because I want to tell you everything I know in 60 minutes, because you don't want to be looking at a computer screen all day long. Okay, so let me ask you this question. Same question. 2020 goal, make an additional £10,000. My preferences are these. You're not going to like this. Lots of capital. Have lots of capital. Why? It's a lot safer. Use the least leverage. I know what you're thinking. No, I want to use lots of leverage. I don't like leverage. Now, we can have a discussion in the Q&A session later on why I don't like leverage, but some of you will know why. Go slow. Do a demo account. Smallest possible trade sizes. What do you mean by small trade sizes? Look at this. This is US dollar. I'll tell you which broker this is later, but there's many brokers. I'm not going to recommend a particular broker. I'm going to recommend several. I'll send you that at the end of the webinar. Look at this. Most brokers will tell you in terms of lots, whether you're doing CFDs or spread betting, Forex or whatever else, they'll translate lots into pip values or point values. This is 39 pence per point. You could say, I want to buy at that point. Okay. And look at this. So you can just reduce it. It'll calculate it all for you. So you know you're risking 39 pence, as little as that. Right? For every point this goes up, you'll make 39 pence. For every point it goes down, you'll lose it. And you can even set it to say, I will close. If it loses 59 pips, I'll lose £20 or £19.32p. Okay, that's it. 0.39%, right, of all your capital, basically. Or I'll make £19. See how little risk you actually need to take? Right? Now you could scale this up as you get more experience. My point to you is this. I actually prefer it when people risk less, because I want them to go slow. Anyway, these are my preferences. You might say, no, screw that. I'm going to ramp it up. Well, I don't want you to pretend you've got a Ferrari and driving down the freeway when you're still learning to drive. So let me ask you this question. Who would you trust? Would you trust a BBC presenting Financial Times award-winning regulated fund manager? That's me. For my fintech work, I've been acknowledged by Number 10. I sit on an advisory panel there. That's me with the governor of the Bank of England. He's still the governor. That's me with HRH and all the rest of it. It's me on Newsnight talking about international trade. It's me doing some of the charity work. When you make money from trading, trading is such an unfulfilling job because it's the hardest easy money you'll ever make. Hard because you've got to learn the skill. Easy because it's stupid, right? So you want to do something good with it and fulfilling, which is usually be involved with charitable foundations and the like. Anyway, that's me in my Financial Times column. That's articles about me called The Rainmaker and whatever. My point is, hopefully you'll trust me. I'm not going to talk any more about myself. Let me ask you this question. Would you trust a strategy used for 20 years from one of the world's leading traders? Strategy I'm going to give you, in case you don't have your own, is one which was given to me. It's one which I've described in my Financial Times columns, the Diary of an Internet Trader columns, on my Bloomberg TV show. So it's not, first of all, it's not a secret to me. It's one which this guy gave me, Bill Lipschutz, who was global head of foreign exchange at Salomon Brothers when the chairman was Warren Buffett, and he's in my book, The Mind of a Trader, published by the Financial Times, Lessons in Trading Strategy from the World's Leading Traders. Don't buy the book. It's 20 years old. I'll give you a free chapter as well at the end of this webinar from that book. I get £1 in royalties from a £25 book, so don't buy the book, okay? It's not worth my time. Give the money to charity. I'll give you the best bits in this webinar. Would you trust a strategy from him? Because he's the one who gave it to me. I was a poor student at university when I first met him 20 years ago. I thought, if I'm going to be a hedge fund manager, I better meet the world's leading traders, okay? Which is why you're on this webinar. Which is, Albish, how do you make this? I thought, well, I'll speak to him. How do I speak to him? I'll tell him I'm writing a book. And the FT agreed to publish it. Okay, so he gave me a strategy for a poor private investor. Okay, because I couldn't afford data feeds and all these expensive things. So he said, look, I'm going to give you a simple strategy which you can use and the best practice from hedge fund managers. Why would he do that? Why would he do that? Why wouldn't he? Warren Buffett's book describes his, George Soros describes his, Richard Branson's book describes how to become a successful entrepreneur. You know what the problem is? Most people don't dedicate the time or the energy to following these things. That's why. But all the wealthy people, Michael Bloomberg's book tells you how to set up a company, a tech fintech company. I read his and set up my own. And guess what? Follow what the successful people are doing and you'll be successful. Let me ask you a question. What if the strategy, thanks to software, used artificial intelligence-based algorithms to scan the markets 24/7 so you don't need to be a screen slave? Would you like that? That's what we do. So I'm going to show you my strategy. I'm going to show you how and why it works, which Bill Lipschutz gave me, and you can see it there. This is sterling New Zealand dollar. I already showed you some of the I'm going to give you the products which I like the best, which ones I trade and which are my favorites, which I showed you earlier on, which are my favorite things to trade for the year. And they're on screen here, and we'll go through them in a second. These are all live trades at the moment. Okay, just so you can see it, and I'll come back to that in a second. Okay, all that data is live, but we're going to come to it. My point is this, right? I want you to look at this. Look at how when we get a buy or a sell short signal, that's sell short. That means we expected the market to fall. That means we sold at the high price. We're going to buy back cheaply. Okay. That yellow line is our stop loss, and our system tells us all of this information anyway. Notice how we don't get in at the tops or the bottoms of a market. We get in after the trend has already formed, because that's a higher probability area. So we use pattern recognition to develop that. How can you do this? How can you as private investors do this and not have to spend your whole life in front of a bloody computer screen or get a mathematics degree or PhD? Okay, that's the point of what I want to get across to you. And let me ask you this question as well. What if that hedge fund manager, its CEO, didn't charge you any subscription costs? I'm going to charge, because I just told you we're trying to solve a problem for you, which is all your money. You've got very little money, and you don't want it going into subscriptions. You don't want it to go into paying anything every day, every week, every month, every year. What if instead they said, you know what, I've given you my WhatsApp number already. I'll do better than that. I'll give you lifetime mentoring and coaching and daily news, trades, and 12-week and 30-day calls, all this stuff. These are my books. I'll give you the best bits of that. I'll give you a structured course on it as well, because I want you to be profitable. Because if you're profitable, I'm going to explain to you how I become a billionaire if you become profitable. I'm going to show you that in this webinar. I become a billionaire if you become profitable. I'm going to show you how. Let me ask you a question. What if you had lifetime handholding and we're not stuck in a bloody classroom? I hate these people who want to charge you £3,000, £2,000, or $2,000, $3,000 to stick you in a classroom and then tell you to piss off. And it doesn't work because they're not regulated fund managers. They're not regulated money managers. They've never gone through anybody ever trusting them enough to give them any capital to trade with. Okay, instead they bullshit you. So what I'm going to show you is, and by the way, if you're not sure, I'm going to show you. If you're not sure, you can schedule a call with me. I'm that confident, right? You schedule a call with me if you're not sure about everything I've told you. Yeah, I've never done this before. You go to that link, you'll see my calendar, you can click a link and it'll give you my phone number, and you can schedule a call with me and my diary as well. It's that bloody good. So imagine this. We've got a problem. We've got a problem, and the problem is this. Only either the rich professional hedge fund managers are making money, or 25% of private traders. The rest miss out. The rest miss out. The rich are getting richer from trading. We know this because you look at the headlines. But trading is just simply about when to buy and sell. So my Robin Hood job as a hedge fund manager, for which I want accolades from the great and the good, is to take this knowledge from the industry, all right? It's like the magicians in a circle. I'm sort of revealing the tricks of the magicians and telling the regular people, they're saying, listen, we're only looking to buy and sell. How can we do it? So I want to solve these 3 problems for you. Problem 2, too much noise and fake teachers who've never been trusted or regulated, regulated professional managers who are trading millions. And problem number 3, trading software, training subscriptions that are eating into your money. So how are we going to solve that problem? And I'm going to show you how we're going to solve all of this and what was taught to me to solve that, okay? And what was taught to me. Now, I've already shown you which instruments I like for the year ahead. I'm going to show you them right now as well. Let's just go through, let's just go through all of them. Right now, I explained to you why I like something. Now I'm going to go into detail why. I think that anything pretty much with New Zealand dollar is great. But anyway, look, by the way, did you notice how I didn't mention sterling US dollar? That's not going to be one of my favorites for next year. I'd actually want to avoid it. And this is the problem. People are like moths to a flame. They go, oh, but surely cable because of Brexit. Are you kidding me? It's one of the most difficult things to trade. All right. Instead, if you really want to trade sterling, do it against New Zealand dollar. New Zealand dollar, pretty benign, wonderful trends. Can you see this? Can you see these trends? You don't need a genius to point this out to you. Okay. You don't need me to even point this out. Okay. So how did we get these red sell arrows? Okay, and what are we doing with each of these lines here? Okay, and how do we know where the yellow line is the stop loss? How do we get to that stop loss? And what are these dot lines? That's not our profit target. That's where we're adding to our winning positions. Okay, write this down. Winners add to winners, losers add to losers. Right. So one of the most important things you need to know is what to trade, when to trade. My favorite time frames, 30-minute and 1 hour, but I also like 15-minute. What to trade, it's all on screen there. Take a shot. I also showed you earlier, and I'll send it to you as well. What instruments I like for 2020. Sterling, cable, Canadian dollar as well. Brilliant. But it's not just about Forex. Some of you go, I don't like Forex, Alpesh. Okay, fine. We won't necessarily do Forex. But when you go to Starbucks, the man behind the counter doesn't give a shit what you earned your money in, whether it was in Canadian dollars, whatever. But guess what? I showed you all those instruments that are available, all the currencies, cryptos, everything else. We're just following trends, and we are not using supports and resistances, which is out of date. And God forbid, we're not using moving averages. Okay, so I'll explain what's on screen. See that? Go short. Right now, we're going to need that business plan again. I'm going to give you that again in a second. Okay. Disney. I had a bit of problem with Disney. All right. I got wrong foot. I lost 2 trades in Disney, and then we've been making on this one today. Right. We've been making on this. It's all linked to Star Wars at the moment. Didn't do as well. I don't care about the news. We do not trade around news. Now you might say, Alpesh, you're so wrong. You should always trade around news. There's so many websites telling you that. Bullshit. Read that book about Jim Simons. Okay. The richest, wealthiest traders are like me. They're algo traders, and they don't trade around news. Because it's an idiot who would do. Use Mohammed, my friend. Yes, I will be sending you a recording. I will be sending you these slides as well. That doesn't mean you can switch off. Okay. You should know that. Now, I've shared 2 other slides with you. I'm going to stop sharing those 2 slides. I'm going to stop sharing those 2. I might send you more stuff in a second to share. All right. So I'm going to come. Oh, by the way, DAX as well. I showed you earlier which things will trend the most next year based on my experience, expertise. DAX was right up there. This is the DAX. Just look at that screen. All right. The DAX, I won't go into the technical reasons. It's my job as a hedge fund insider to know what trends. Right. DAX is one of them. All right. It's something to do with German structures, the way the DAX is built, and it's the fact that Germans love it and they love things which are straightforward. It's like the Japanese yen. Okay, if you know me, you know I love sterling Japanese yen as well. Okay, so we had a short there, we're back short again. All right, on that. So how do we know where that stop loss is? How do we know when to run those profits? I'm going to come to that in 1 second. And there's a whole bunch of other trades there. We're going to go back to them in a second. These are live, they're on screen, but that's not the point. That's not the point. And you could be trading these with me tonight if you wish, a little bit later. Okay, well, we'll come back to the, somebody's asked me about the Dow. Sorry, let me go back to the Dow. Dow. There it is. There's the Dow. We are short the Dow at the moment. That doesn't mean we won't go long, but all I'm saying is we're short the Dow. You guys are making me money. That's good. I like you guys. I'm not going to share it with you, but you guys are making me money. A trading strategy and system should be such you can be relaxed and give a webinar and still have open positions. Okay, we're not going to be, all that live data feed and those charting things you saw, they're all free. Many brokers offer it, trading software and training. My strategy which we put on a computer system on there and our own indicator. That's mine. I'll show you how to do that in a second. Right, let's do the business plan again and then do my strategy. Right, so let's do the business plan. Business plan again. Now it says FX, but this applies to anybody. That's my mum, always makes an honorable visit on all my webinars. Okay, here we go. Bill Lipschutz, Global Head of Foreign Exchange at Salomon Brothers, he gave me this business plan. This is your 2020 business plan. Pay attention. Trading is like driving. It feels overwhelming. It just seems way too complicated. Lillian, I'll come to GBP, New Zealand dollar. I think I did come to it. I did tell you. We're short it at the moment. Look, we're short it right there. Can you see? We're short sterling New Zealand dollar. Have been for a while. It's always a great trade. Always trends. Look at. Can you see how that's just smooth? Can you just see that? Okay. So I'm just giving you a helping hand here, telling you 30-minute, 1 hour, 15-minute at a push. These are our favorite time frames. Sterling New Zealand dollar for next year is our favorite. So what are the strategy? How do we know when to enter? Where to put a stop loss? And all the how much money to put into a trade. Those are the things we need to know. I'm going to give you that, and then that's going to achieve this business plan. So trading is like driving. Okay, always appears too complicated. You've got rear view mirrors, you've got a steering wheel, you've got a rear view mirror, you've got a brake, a clutch. Too much to remember, but you all mastered it. You all mastered it because every piece of success in life is around the 3 Fs. Okay, write this down. The 3 Fs. You won't do anything or succeed in it or make money unless it's fun, it's fulfilling, and it generates funds or money. The 3 Fs of life. Okay, trading has to be that. So I've got to give you a holistic plan to make it that. That's the first thing. The second thing I want you to remember is without a goal and a business plan, you're going to fail. Without a destination, you're never going to get there. So let's do the destination. Then you can use my strategy if you wish, but I've already told you what I want you to look at for 2020. I'll recap it in the Q&A as well, and which brokers I like and don't like and everything else, okay, as well. Road to Rich. Road to Rich. Why do I call it Road to Rich? Well, because I showed you a car earlier, but because Bill Lipschutz, Global Head of Foreign Exchange at Salomon Brothers in my Financial Times book, called it. You want to know the road to rich, don't you, Alpesh? Because he was teasing me because he is super rich. And I came to see him 20 years ago as a poor student and said, how can I make a career in trading? I was that passionate about it. I wanted to change my whole life for it. Okay, trading is the best entrepreneurial venture in the world. Write that down. Why? Because it is the best side business in the world. You can start tonight without an office, without a warehouse, and with no money down, because you can just monitor it and decide if it's for you or not. That's why it's the best business in the world. All other businesses require greater commitment than that, right? So let's say, and Bill gave me these numbers for the business plan. He said, let's assume your maximum loss is going to be 1% of your total capital. Now, your total capital today might be $1,000. Okay, it might be $10,000. Doesn't matter what it is. It might be zero. All right. So I'm going to give you the business plan now, Joydev. I'm giving it to you now. Write it down. Write this business plan down. It's right here now. I'm giving it to you. Okay, so assume your total capital eventually is going to be £20,000 or 20,000 US dollars. Okay, imagine it's going to be eventually this. So Bill said to me, remember, Bill was Global Head of Foreign Exchange at Salomon Brothers, so the biggest trader in the world. He was in my book. He became my mentor and friend. He taught me all the stuff. I practiced it, and then I became a hedge fund manager, so just giving you the context. Okay, he said, so therefore, 1% £20,000 means your maximum loss per trade will be £200. Way too big, by the way, but we're just building the business plan for a start to decide if trading's for us. Now, again, we're going to just assume we're a little bit better than a coin, and we win 60% of our trades, and we lose 40% of our trades, okay? So we have a loss of £200 every time we're wrong. The 40 times out of 100 we're wrong. And we win because we're going to pick a strategy where, remember, winners add to winners. We're going to add to our winning positions. Once we're in a bit of profit, how much profit? I'll show you in a second. We're going to add to those winning positions. So we're going to make more money when we win than when we lose, okay? Otherwise, we're not going to pick that strategy, right? Whatever strategy you have, if it doesn't meet these criteria, dump it. I'll give you my strategy in case you don't like your own one. So, for instance, with something like this, where we're short, as you can see there, short sterling against New Zealand dollar, but it could have been anything. It could have been Spotify stocks. It could have been Barclays Bank stocks. Doesn't matter. See that dotted line? That's where we add to that position, because short means we profit from its falls. We add to that position, and we expect to make, say, £300 by the time we exit. And the most we'll lose if this stop loss line came in will be £200. Okay, that's what I'm talking about when I talk about this. We don't have profit targets because why would we cap our profits? So average loss, £200, average win, £300. I'll explain more of this as we go on. I'll reiterate, and I'm going through it relatively quickly. Okay, so let's say you did 100 trades. Well, 60 of those on our assumptions, and they're over-optimistic assumptions. I'm going to really dial them back in a second. Okay, 60 of those would 60 times £200 would be profits of £18,000. 40 of those will be losing trades. £200 would lose £8,000. So we would make a net profit of £10,000 over 100 trades. £10,000 over 100. When Bill taught me this, I was at university and I said, tell my parents I want to leave university. I want to just sit at home and trade. This is what blew my mind. I want to be an evil capitalist. All I want to do is trade. I want to bang my keyboard all day long, sitting in my underpants, eating nachos and trade. This is what made me want to be a trader 20 odd years ago. And by the way, I had no silver spoon in my mouth. I grew up in the north of England. I was born in Leeds. Parents, my dad worked in a factory. My mum was a nurse. Okay, so this kind of money blew my mind when I was at university. All right. But wait a minute, we don't have a strategy. Now I said, Bill, don't worry about strategy. I'm sure you're going to give me one. Okay, and I'll share one with you in a second. I said, I'll be a day trader. I'll do 100 trades per week. Why would I do it over a year when I could do it per week? 50 weeks in a year, 5,000 trades per annum at £10,000 per 100 trades. I did the maths on it. And I said, that works out at £500,000 a year. I know what you're all thinking. Alpesh, don't be stupid. We're not going to do 10% of that. We're not going to do, we're not going to do 90% of that. We're not going to do 3/4, 2/3, even a half of that, Alpesh. We're not even going to do a quarter of that. We're not going to do a fifth of that. We're not going to do 15% of that. Let's say we did 10% of that. Let's say this business plan was over optimistic and we only did 10% of it because we were rubbish. We were sleeping in bed all day long, too busy spending money. So let's say we did £50,000 a year. Hang on. No, I said our goals are going to be just modest. They're going to be maybe 500 to 1,000 a month. That's it. So let's keep it really modest. Let's just say our goal is 1K per month. That's all it is. In which case, 10% of this business plan is way too over optimistic. So let's dial it down some. Let's really get modest. Let's not try and run before we can walk. Let's do baby steps, because baby steps we learned in my firm when we train new apprentices up in my firm, we start them off with just $1,000 account because we realize they get more optimistic because they have smaller hurdles, and as they achieve them, they go, yeah, I did that. So they do the next one. Whereas if I tell them, right, I want you to make $1 million in a year, they blow themselves up and they fail. Not only that, they destroy my firm's capital as well. Okay. So Bill said to me, start off as a day jobber, do 100 trades every 6 months. All right. Okay. Every 6 months. Troy, I said what the minimum capital is in a second. You shouldn't start off with 1,000, with 20,000. Start off with 1,000. I'll go through that minimum capital again. I said, if you want to make 10,000, here's the maths on it. I did that earlier, but I'll go through it again. Start off with, and I also said what you should start off with, the demo account, but start off with just $1,000 first of all. But if you start with 1,000, Alpesh, what's the most you can make? I'll show you that business plan again that I showed you earlier, because I know I ran through it quickly. Okay. So I'll go through some of the key slides again at the end of this webinar. Don't worry. Okay. And Joy Dever said, how do you find a trade to give you win-loss ratio of 300? It's not about win-loss ratios. Hang up, guys. You're jumping too far ahead. You're working with too many presumptions that you've had from bad teachers. Okay, so day jobber, 100 trades every 6 months, 200 trades per annum. That's £20,000 a year based on those maths. Okay, well, that's still over optimistic. So not 10%. This is about 4% of our business plan, but that's still over optimistic because we only want to do 1,000 per month. That's all we're going for. We're going for a small baby step, because how are we going to do that? How are we going to find those trades? Well, we're going to need a strategy which tells us, right, as this strategy does, look, if we let our trends run and we make more money, remember, winners add to winners. So when we get a winning profitable position, so when the trade which we entered at this down arrow gets to this red dotted line, we double the position size. So we start small initially at this red dotted arrow, write that down, start small initially, then we double down, we enter another position the same size as we did initially, winners add to winners, because the best hedge funds in the world do this at this red dotted line. Why? Because then we're risking some of our profits that we made when it moved to that level to make even more profits. We don't have profit targets. Only an idiot has profit targets, as Bill Lipschutz said, because a profit target is capping your profits. Why would you do that? If you discover gold in your back garden, do you shovel it up and say, no, I don't want it, I don't want to stop? Only an idiot talks about win-loss ratios. All those bad, piss-poor teachers you find on the internet telling you profit targets, risk-reward ratios, they're idiots. They're not hedge fund managers. Okay, hedge fund managers run their profits. They add to their winning positions. Winners add to winners. So how do we get that red dotted line? To answer that question, look how it's a parallel of this yellow line. It's just a mirror reflection of the yellow stop loss. So how do we get the stop loss? The stop loss is based on two principles. It's a volatility-based stop loss. The more volatile the market, the further away the stop loss. So write that down, volatility-based stop loss, VSL, and write this down, volatility-based position sizing. In other words, the further away the stop loss because the market's more volatile, the smaller the position size so you don't risk losing more money. How much money you risk losing? I just told you how much you would risk losing. It's in this business plan, average loss £200, and it's in my earlier one. Hopefully as little as possible. I want you to lose as little as possible or have as much capital as possible. The more you risk, the more you might make, but the more, if your stop loss is hit, you'll be screwed. Now, important principle, losers add to losers, L plus L, so write that down. Now, at the end of this, you should have written down, my friends, you should have written down VSL, volatility-based stop loss, volatility-based position sizing, L plus L, losers add to losers, never add to losing position, and winners add to winners. Hell of a lot of that, heck of a lot of that, heck of a lot of information there is. I know there is, okay? But that's because I've given you a business plan, I've given you a strategy. I haven't given you a strategy yet. I haven't told you how do you know when to buy. Let me tell you how to buy, okay? How to buy. Now, if you want to make more money, you increase your capital, or write this down, Joy Dave. To make more money, you either increase your capital, you increase the amount you place on each trade, okay? Or you increase the number of trades. Guess what I'd rather you did? I'd rather you increase the number of trades you placed rather than increase the risk on each trade, okay, i.e. the amount of capital on each trade. Do you notice those three variables? To make more money, you either increase your capital, well, you've got a limited amount of that, the number of trades you do, or the amount you place on each trade. I'd rather you didn't increase the amount you put on each trade. I'd rather you did more trades. How can you do more trades? By having more trades to look at, more opportunities to look at. How do you find more opportunities to look at? You just increase the number of windows you're looking at. That is the safer way rather than, oh, I'll ramp up the capital. Got it? Right? Do you see how they're all related? That way you can make a lot more. Okay? Now, you don't need to make 20,000 per annum or even 1,000 per month. Okay? I'll tell you why, Joe Dave. If you've learned the skills to make 1,000 a month, you've got the skills to make 2,000, obviously. You can just increase the number of trades you do or the amount of capital you've got. If you've got the skills to make 2,000, you've got the skills to make 4. If you've got the skills to make 4, you've got the skills to make 8, because all you would do is increase either the capital or the number of trades you place. Therefore, if you've learned the basic skills to make 1,000, you've actually got the basic skills to make 1 billion. The difference being the amount of capital you've got, yeah, that's my constraint, or the number of trades you can place in the physical 24 hours. That's the other. So, Joy Dave, I've just given you the blueprint to become a millionaire. You might say, no, you haven't, Albish, because I haven't got £100,000 capital. Well, you'll have to start slowly then and take longer to build it up then, won't you? So, yeah, you know, I'm not, you know, oh, yeah, of course. What do you do to make more money? You increase the time that you give yourself to make it because you'll place those trades over it. No, you're not going to make with £1,000 £1 million by tomorrow, but this is giving you how long it'll take you. So you might ask, well, wait a minute, Albish, 100 trades every 6 months is 1 a day, which is what you started off with. That's £20,000 per annum. If I do 2 a day, that's 40,000. If I do 3 a day, that's 60,000. Bingo! Well done. Okay, but the question you should be asking, which is the question I asked Bill Lipschutz, is, well, if these numbers are correct, how come everybody isn't rich? And the simple answer is this: the 3 key reasons for failure are these: bad teachers, bad mentors, and bad strategies. So let's look at strategy. How do we find? That's what the important thing is. I haven't discussed the strategy yet. What's the strategy gave me? How do we know when to enter and when to sell? The biggest mistakes most people make, they add to their losing positions. They don't have volatility-based stop losses. In other words, the more volatile the market, their stop loss is too close or too far. They put too large a position, so they lose too much money. I've already told you how you do the interrelationship between how much you're going to lose and where the stop loss is, but we can go over it again. They get into the wrong trades in any event, the wrong timeframes. I've told you which are going to be the most trending and the easiest ones for 2020 as well. For instance, sterling New Zealand dollar, and you have to bloody look at the damn thing to find out. But the one thing I haven't told you is the strategy. Now, you might have your own, but if you don't, have a look at mine, which is what I'm going to give you, or the one rather Bill Lipschutz gave me. Now, let's start off with simple: 100 trades for 6 months, 200 trades per annum, £20,000 per annum. That's my mum again, by the way. No, that's not the management. That's not the management business plan total we're after. Remember, we're going to go baby steps. Okay, we're going to just go for 1K per month. I know it's really piss poor small, isn't it? You can go for more if you wish. Start off, do more trades or a larger amount of capital, up to you, or risk more capital. I'd rather you didn't. I'd rather baby steps. That's just the way I am. Okay, it's the way I train people in my firm. I don't want them taking a Ferrari on this motorway on the first day of driving because they're going to crash the bloody thing. All right, that's all. But if you want to go and have a car crash, feel free. Okay, so 1K per month is going to be our goal. Like I said, the reason bad teachers are out there and they've fed so much crap into you, okay, is because they haven't got a bloody clue. They've never had to manage capital. And if they had to manage capital, they'd know that if their rules were not based on what I've told you, they would never get an iota of money. Instead, they'll be telling you all sorts of bullshit instead. So Bill Lutcher said to me, let's focus on strategy. And I said, Bill, what strategy could I possibly use? Remember, I was a poor student at the time. He said, look, we're going to have to use something which is simple and widely available. For private investors, trend following is going to be the easiest. It's what some of the big hedge funds do, but it's also applicable to private investors because it doesn't require them to be by their computers all the time. It doesn't require expensive subscriptions or anything like that. Okay, and trend following or momentum-based trading is simply this. That's you. Okay, you're the guy sitting at the end, riding the coattails of somebody else who moves the market. The Goldman Sachs of the world, that guy in the bowler hat, GS, moves the market. We're just riding his coattails. Okay, it's all we're doing. Okay, I'll give you an example. Let's look at US dollar Swiss franc. One of the ones I've said is the favorites for 2020 to look at. US dollar Swiss franc. We're just riding the coattails of the trend. That's all we're doing, right? So how do we do it? Bill said to me, to know when to enter that trade, what we're going to do is we're going to use the principles of hedge funds, but we're going to apply them for private investors. And I said, that sounds good. What does it mean? He said, look, for momentum, we're going to find a way of measuring momentum. We're not going to find a clever way of looking at order flow from Goldman Sachs because I won't have access to it. He said, you're not Salomon, so you're not going to get access to it. We're going to have to look at what you've got access to. I said, what do I have access to? He said, well, you have access to software, which will tell you when the price is closing near the high. If the price is closing near the high, it's momentum. It's telling you, oh, I want to buy at, it's telling you, people are saying, you know, like those TV auctions, I got 40, anybody give me 50, I've got 50, anybody give me 60, I've got 60, anybody give me 70. Okay, that's what it is. That's what momentum is. Okay, so we're going to look at that and we're going to measure it. And I said, how the hell do you measure it? He said, well, we'll get to that in a second. I said, why are we measuring that? He says, well, because if the price is closing near the high, it tells you there's an increased probability that in the next period, the price is probably going to move higher because there's so many buyers closing it right near the high for that period. Okay, and I've told you which periods I like, 15 minutes, 30 minutes, and 1 hour. Okay, and which products I like, which are most likely to trend. And I said, well, surely there's different ways of measuring that. You could measure if the price is closing near the high. You could measure if the lows are moving higher. You could measure if the highs are moving higher. I said, yes, there are. There's many different indicators out there to do it. So we're going to use, because no one indicator works all the time, and you're a poor student, Alpesh, remember it's 20 years ago, we're going to use what all hedge funds do, which is we're not going to look at one indicator. We're going to look at multiple indicators. But we're not going to use them the way the textbooks do. Okay, and we're going to use the multiple indicators to filter out any bad signals. So only if multiple indicators show that there's a trend and there's buying pressure would we buy. And it might mean we miss some good trades, but that's fine. At least we'll miss a whole load of bad ones. And that's the most important thing he said. So we're going to look at multiple indicators, but not the way the textbooks do. I said, okay, fine. He said, the second thing we're going to do is, because we want big moving trades, we want big profitable moves as often as possible. Now, I want you to write this down. No trader in the world, whether it's George Soros or Jim Simons or whoever it is, none of the successful hedge funds in the world, the biggest, are right all the time. They're right about 50-50 to 60-40. So how do they make money? Well, because the times they're right, they add to their winners, they drive it home, they accelerate when they're in winning position, okay, by taking some of the profits and doubling their position, right? So they make more when they win than they lose when they lose. Got it? That's what makes us in the hedge fund industry successful, right? So to get those big wins, wish we could have them all the time, but we don't. 20% of our trades are big winning trades. 80% are either small wins or small losses. And we have no big losses because we never add to a losing position, right? So that being the case, how come we don't always just have big winning trades, Alpesh? Well, if I only had big winning trades, I'd be the richest man in the world, wouldn't I? All right, somebody would have cornered the market in money, but we don't. And because God made the world in a way where nobody has a crystal ball or a time machine, no one trade is always winning. If you want proof of that, just look at Twitter. You look at sterling US dollar, you buy into it and you think, oh, I think this is going to be a winning trade. And I say to my wife, hey, babe, oh, guess what? Sterling Canadian dollar. I think we should short it. Let's mortgage the house. Is she going to let me? No, because she's going to say, Alpesh, how do you know? What if it's not? That's why. That's why. My point is, you're never, somebody tweets something, all of a sudden it could go against you. You're not going to take stupid risk. And certainly not as a hedge fund, because they'd remove my license if I did that, all right? So what we do instead to try and find those big wins and increase those probabilities of being right is we look at multiple timeframes. Are multiple indicators across multiple timeframes all suggesting a purchase? But there's point number 3, and this is the most important, and this is where people go wrong on my webinars. They run with points number 1 and 2, they ignore point 3, and they say, oh, I know all I need to know, and this is where they got it wrong. Okay, and that's PC plus PR. Okay, let me tell you, PC plus PR, and I'll give you the details of this in a second. Wait for me, Joe, there. Right, so because I was a poor student, Bill Lipshaw said to me, you're going to have to look at what's already free and available out there. He said, so we're going to look at multiple indicators to measure momentum, but not the way the textbooks do. So there's multiple indicators we'll look at, things like the MACD, the stochastic, the RSI. And I said, bullshit. If those worked, everybody be happy. He goes, no, they don't work. They don't work all the time. They work some of the time. So we'll look at multiple indicators, but we'll look to use them in a way the textbooks don't, because sometimes they're lagging, sometimes they're early. So what Bill Lipshaw said to me is, we're going to look to see, rule number 1, multiple indicators, are they all flat to rising? MACD, stochastic, RSI, flat to rising. But that's only 1/3 of what we're going to look at. Flat to rising, multiple indicators. But we're going to have to look at them across multiple time frames. Okay, so I was used to do this manually. Now I just get the computer system to do it for me, and I'll show you how you can get the computer to do it for you as well. Multiple timeframes. Why multiple timeframes? Why multiple indicators? Because that removes the bad trades. And if across multiple timeframes, they're also, so you've got longer term money pushing the market higher, let's say, you've got an increased probability of a bigger move. Write that down. Increased probability of a bigger move. That's what trading's about, right? Multiple timeframes. And the third thing I said was PC plus PR. I'll tell you what PC is. Okay, PC was price confirmation. This was the most important thing. Did the price make a 2-period high? Okay, it wasn't enough. Listen to me, Joy Dave. It was not enough that there was multiple indicators flat to rising across multiple time frames. There also had to be a 2-period high and pattern recognition, which is PR. Okay, PR, pattern recognition. We use Microsoft Azure, which it gives us artificial intelligence to pattern recognize over the preceding 20 periods. 20 periods we found there was too much big data. If we used more than 20 periods, if it was less than 20, hey, wasn't important and significant enough in mathematical terms. Okay, so we used AI for pattern recognition. What was the price doing beforehand, right? What were the patterns beforehand which gave us that? So let's look at Google. This is live right now. This is Google's price right now. You can look at it on the Tinternet if you wish. Notice how that's a down arrow. That told us to sell short in Google. Now, I hold a long position in Google, which I'm going to hold for 100 years. So whenever Google's falling in the short term, I'm making money. I'm hedging. I'm making money on the short in the short term, which pays for my long-term position, which has been paid for years ago. It's like your mortgage on your house. It's been paid for. My house is free. Okay, with my Google is my house. It's free by these short-term trades which are falling. That's called hedging. That's what makes you even more money when you trade like that. Now, notice how these patterns here. Now, my brain can't work this out, but Microsoft Azure's artificial intelligence can. Now, you're not going to do that bit. Okay, you're going to probably do multiple indicators, multiple time frames, flat to rising, and price confirmation, right? That's fine. You're going to look at the 5 minute, you're going to look at the next time frame along. You can do it manually. I used to do it manually. I'm going to show you how to do it automated, which is what my computer system does. All that data is live, real time, and free, by the way, from many brokers. But when we did it like this, I had the bloody breakthrough, and it was thanks to Bill Lipschutz. I got that damn breakthrough. Okay. Like I said, multiple indicators, multiple time frames. Write that down. Multiple indicators, multiple time frames. Price confirmation. Price confirmation means the price made a 2-period high, and pattern recognition. When I did that, I was at university, because remember, it was 20 years ago. Bill Lipschutz became a friend and a mentor. He was in my book, Mind of a Trader, so you can confirm it. Financial Times published it. I was at Oxford at the time, read Carnation, last exam. I perfected the strategy, won awards using that strategy, okay? Won awards. Patel is top FTSE 100 forecaster. That's what gave me fame and fortune and all the rest of it. This is me on the BBC earlier this year. So for 20 odd years, I've got a track record going back more than that, 25 years from my own TV show, 300 million people on the BBC when I talk about the markets and all the rest of it. The Financial Times then said, shit, you're good. Would you like to write a book? And I said, yeah. You know why? Because that'll give me a profile for going even bigger and raising my own fund. So I agreed to write a book, or write a diary of all my trades. I said, yeah, I want to do a diary of my trades because I'm bloody good at what I do. I won that competition. Okay, there I am. You know who came number 14? Neil bloody Woodford. He was shit then, okay, and he's shit now. And you know what happened? He got $10 billion. You know how much I got as a result of all of this? Well, 16 years later, I'm still stuck on 92 million euros. Okay, so our assets under management. You might say, well, why didn't Neil get it? But Neil's so amazing. Neil's great. That's why he got 10 billion. Really? Really? Is he, people? Is he really? Anyway, sorry if I sound bitter. Let me tell you something. The city is not about merit. It is not about merit. It's about who you know. He was sacked. He should have been sacked 16 years ago, and they should have given me the 10 billion. The city is about who you know, not about merit. Okay, I can tell you that now. If you wanted proof of that, that's proof. And I've told the FT about it as well. He is shit. I won that competition. I beat him 16 years ago. All right. So anyway, I used all of that profile to set up my fund, my asset management company. That's me at my very first set of offices, full set of hair. I licensed the algorithm, which I've just told you about, the indicator or the algorithm, to people like Merrill Lynch, HSBC, who used it, and then they promoted the fact that I'd licensed it to them. They paid me about $1 million over the course of a year, which is what allowed me to set up the hedge fund. That got me lots of fame and fortune, because when you're calling the markets right, guess what? You get asked onto a lot of things. Through that profile, I was able to raise capital for my fund. I'll show you how to download it as well. Don't worry. Naren says, calm down. I know, Naren. Naren, trust me, 16 wasted years in one sense, okay? You'd be angry, Naren. All right? People ask me, they say to me, hey, Alpesh, will you give us personal coaching and mentoring? I said, not enough time. Technology didn't exist for this. Can we copy your trades and trade following requests they'd give me? And the technology didn't exist. It does now, though. Training workshops and seminars, I said, guys, I don't have that time. Okay. There's just not enough time in the year. So I asked people, over the years, I kept asking people, what is it you want? What is it you want? And they said, well, we want something where we're learning at our own pace. We can see the trades you're doing. We can copy what you're doing. We can see live. Or we can actually use your strategy on whatever instruments we like. We might not use them on the same one as you. I showed you earlier at the start of this webinar, there's 6,000 different instruments. 6,000. You and I are never going to trade the same stuff at the same time. Okay. They said, we want one-to-one attention. I thought, well, maybe technology could solve these problems. And it wasn't until technology came along that I could solve these problems and help people learn. That's why I came I thought, you know what? The answer isn't books. I thought the answer was, I'll just write an FT column, or I'll do a TV program. That wasn't enough for people. And I certainly didn't want to give them hotel venues and make them travel. I ain't got that kind of time. I wanted them to still have that one-to-one experience, though. Okay, ongoing support, because these are the things they wanted. And I thought, that's the idea. And I hated all this bullshit from all these people who say they're from trading academies. By the way, if you want to know something's bullshit, I'll have the word academy in it, university, institute. And if you don't believe me, put it in the chat box, any tutors, and I'll give you I'll tell you what our Financial Times, when I was writing for the Financial Times, investigated so many of these people, and I'll tell you what we thought of them. Okay, I'll put it into the chat, put it into the chat box, any names you want me to tell you our views on, or any brokers, and I'll give you it now. Okay, I thought, and all this $2,000, I thought that's greedy, that's bullshit. If people are only got, very little money, why would you be charging them? Why would you charge them a subscription? If you genuinely care about them, you shouldn't be charging them a daily, weekly, monthly, annual fee, no subscription, because you want them to do profitable. You shouldn't be charging them $2,000 either, because you want them to be profitable. Okay, and this is but the problem was, when I gave these manual rules to people, they weren't willing to do it manually, because they had to calculate every buy and sell signal and every entry point. So I thought, we need a technological solution to this. And the technology didn't exist. AI didn't exist for a start. So we never did anything. I'll tell a few people through the books and columns that there's nothing they could do. I mean, I've told you the rules: multiple indicators, multiple time frames, flat to right. Oh, by the way, we've got a buy signal on Google right there. You can see it there. Can you see the green arrow? That's live. Okay, so we're out of our short on Google. You can see it there, right? That's a buy. Okay, live now on air. You can see it. We are long Google right now. So anybody who wants to trade these, Louise, I know you are. Okay, it's there. Secker and Winters, no, please, come on. They're great at advertising. They are not FCA regulated hedge fund managers. If they're so good, why has nobody ever given them capital? I don't know who the hell Ramon Gill is. It sounds like a made-up name, Bernie, my friend. No. These people are charging you thousands. Tell me, is it £5,000 they want off you, or 15,000? Okay, how much do you get hassled to give your money up to them? That's not fair. That's not right. Okay, Anton Creel is not an FCA regulated hedge fund manager managing outside institutional money. We manage money from Aegon and AXA. I'm not talking about these failed people, who were cleaners once at Goldman Sachs or at Citibank and now claim, bullshit. And by the way, if you want to know if they're good, here's a test. Ask them, where's your FCA license? Ask them, okay, who are the institutional investors in your fund? If they go, oh, no, I made so much money, I just want to get back now. Bullshit. Ask them, if you're so good, how come Bloomberg and the BBC and the Financial Times don't pay you to be on air? Okay, I mean, presumably if you're shit hot, those institutions are going to find you, aren't they? Aren't they going to find you? Oh no, instead, what have they got? Mrs. Smith from Croydon, Mr. Jones from Chelsea think they're wonderful. Really, do they? Trading college. College is another word. Okay, forget about it. Forget about it. I'll come to brokers in a second, Paul. So people are having to do this, and I thought, we need to automate. We need to automate. So we're waiting for technology to come along, because, we use technology to clean floors. Why don't we using technology to trade? And so we put it all into one indicator, and we thought, well, how can we make this into $1 billion business? How do we make this into a Google of trading so it's worth my time and effort? Okay, because anything short of that is not worth my time and effort. Why the hell should I bother if it's not going to make me $1 billion? I'm a greedy bastard. Okay, and without an indicator, this is what people were doing. They were just doing this. They were doing individual trades manually with the rules I gave them manually. And hey, that was their lookout, not my fault, not my problem. And with an indicator, it becomes more automated. So I thought, well, how do we automate things? Okay, I thought, well, we need to put this together. We need to put it into a simple to use system, which they can do 24 hours a day, something they can do themselves. We need to use technology. So we gave them the indicator. We gave them the indicator you're seeing on the screen. And we thought, well, can they follow it? Or they're going to blow themselves up. If they blow themselves, what's the point? This is the indicator, okay? This, see the red arrow? That tells you whenever there's multiple indicators, multiple time frames, and pattern recognition, price confirmation using our AI engine, scans all these markets 24/7. All this data is live, real time, and free for life. Okay, so it does all of that. So we put it all together. We initially did it for our own firm, and then we thought we got this idea from Jeff Bezos, who was a hedge fund manager and then set up Amazon as the world's richest man now. Okay, he was a hedge fund manager. He spun out his technology out of D.E. Shaw, his hedge fund, and created Amazon with the money he had. And we thought, shit, why don't we go into technology as well and create the Google of trading? So first of all, we gave it to people. And we found when they had the indicator, they had confidence in strategy, obviously. They had lower stress over losses because they knew the losses were fixed and they knew how much they were at the time of entry. It told you everything, when to enter, when it's removed every single trading problem I told you earlier on. And anything which removes all people's problems and helps them make money in their life easier is $1 billion business. So then we thought to ourselves, oh, how do we do this? So we put a business plan for long-term profits. That's what they felt they had because we gave them the business plan itself. Clarity of exits, clarity of entries, clarity of stop losses. So we put this together as a technology, a piece of fintech, a piece of financial technology out of my hedge fund called Pips Predator. We called it Pips Predator. Okay, and it basically told them through this green arrow, it put all those rules together. Buy when the price goes above the horizontal line because that confirms this price momentum, odds of a problem move have increased. Now remember, all trading, as I've shown you throughout all of this, thank you, Naren, my friend, all trading, everything through the books I've told you about comes down to putting the odds in your favor, winners adding to winners, knowing when to add to the winner, never adding to a loser, starting small, adding to that position. Now, this is not just me. This is not unique to me. It is what every single successful hedge fund in the bloody world does. Okay, this is Uber, right? And let me just show you with Uber, all right? And I'm going to make a confession to you. In fact, it's not a confession. Notice that trade. That was a losing trade. That was a losing trade. Any decent momentum-based strategy will make sure any losses are small in size, short in duration. Write that down, small in size, short in duration. Notice that with our strategy, small in size, short in duration. This was the killer trade, which made us a bloody killing. This is long on Uber. Long on Uber. Why do I pick Uber? Because Uber trends. I don't know why it trends. It trends. If it trends, it makes my life easier. Okay, and it trends on the 1 hour time frame nicely. I've shown you some of the other ones. Look, there's a picture there. You can take a picture of that. These are the ones we think for 2020 are the best ones to bloody trade in the time frames. I'll go back over those slides earlier on, right? But to be honest, our algorithms tell us that. It's not it's just experience, and algorithm tells what's trends and what doesn't. So we put it all down into this. Okay, so I encapsulated all the rules which I believe into a system, and we created what I think is the Google of trading. Now you can stop here if you want. Leave the webinar now if you want. Those of you who don't want to leave it, Stay with me for an extra 10 minutes. We'll do the Q&A, and I'll show you how you can download the technology part that I created. You don't have to. You can leave the webinar now. I've told you everything from the products I like for 2020, the stocks I like, the rules, which is volatility-based stop loss, volatility-based position sizing, business plan. I've given you everything that I know, and I promised I'd do it in 60 minutes. I've done it. If you want to download the software and the technology, stay on the webinar. Okay, what does it do? Well, we created it. We created the Pips Predator to highlight the momentum, to remove every problem people were having. How do we create that into a billion-dollar business, what I think is going to be a Google of trading? I'll explain that journey in a second. Okay, sideways markets, because it'll keep you out of sideways markets and profit in trending markets. All right, the computer does it. Human brain can't do this. It's just too difficult for it. Okay, we started sacking our fund managers using this AI. As soon as we started creating, and that's actually why we created it. By the way, on Bitcoin, by the way, cryptos are the best thing to trade for trends. You know why? Because the big banks don't do it, so they trend more smoothly, like Bitcoin. Absolute. I'll let you into a secret, and I've mentioned this on the BBC as well. All right, cryptos are the best thing to trade for trends. For trends, I'm not saying to buy for the long term. I'm saying to trade short and long. The best time frame we found was the 1 hour time frame. The number of trades in the typical month was about 25. Some months it's 40, like this month, you know, because of the election and everything else. Sometimes it's fewer, 16 trades. Net pips captured in a month, on the whole, it's about 2,250 winning minus losing. So the net pips, winning minus losing. Some months it's as high as 4,000. Others it's as little as 0 net pips. You know what trading is? There's no guaranteed monthly income. Some months you make more, you save that for the months in which you make a loss or nothing, and you iron it out, and on the whole, you're looking to make about 1,000 a month. Now, if you can make 1,000, you've got the skills to make 2. If you can make 2, you can make 4. Okay, Fred, drop me an email. Not an issue, my friend. Okay, the best winning streak, like throwing heads in a row, 70 winning trades out of 100. The worst, 30 out of 100. Okay, typical max loss, 50 points before we were stopped out. Now bear with me a second. Let's say you did a massive $2 a point. Way too much risk. You'd lose $100, wouldn't you? Way too much risk. But bear with me a second. 2 times 2,250 net pips captured in a month would mean in a month you make $4,500. I said our goal is 500 to 1,000 a month. So you only needed to do 10% of that to hit your monthly goal, which means you didn't have to do $2. You could do 20 cents a point. Remember I showed you earlier 39 pence? You can do brokers which will give you 20 cents. I'll talk about brokers in a second. Isn't that brilliant? That's when we knew we had the Google of trading, because people could start small. Now Joydev said earlier, I want to make more money. But actually, Joydev, it's about the mass market who want to start small in baby steps. Okay, it's not about trying to get rich. It's trying to get rich slow. Those are the people who get rich. People who get rich slow. Okay, not the ones who try and get rich quick. Okay, and then I asked people, what do you want? They said, well, we don't just want the software. We want you to mentor us for life. If you're so shit hot, Mr. Patel, hold our hand for life. I went, okay, that's a bit scary. And I thought, hang on, if they're profitable, they don't need hand holding. So we risked it. We risked it. And it worked. People didn't need hand holding. So I said, I'll mentor you for life then. Okay. And they said, we want a regulated hedge fund manager. I said, fine. We want a professionally trained communicator who won't bore us with the videos and the webinars and the training and the discussions he's going to give us. I said, fine. We want somebody who's paid by Bloomberg, paid, right? If you care, it was £3,000 a week for my TV show. And by the Financial Times, if you care, it was £1 per word, which is why my wife says I talk so much. Okay, visiting fellow at Oxford University at Corpus Christi College, Oxford, in business. Okay, if you care, so we continue doing research on this and behavioral trading and award-winning picks. Well, you saw my Financial Times award. I said, wait a minute, we've got a world-class brand. Given that we've got a world-class brand, we've got to create this software. We've got to create this and make it mass market. That's ridiculous. Okay, it's going to be amazing. So can it make money? I'll show you how to download it. Give me a second. Give me a second. You're all going nuts. I'll show you how to download it in a second. Is it easy? Yes. I'll show you some more trades. Can you do it any time of the day job? Yes. How much does it make? I'll show you that. For 2020, I want a bunch of people. I'm going to show you exactly how many to become profitable and make a shed load of money, because they make me a billionaire if they do it. And I'll show you how. Euro dollar 5-minute bars. This is one of my apprentices who used the indicator. This was his trade. Now, I don't like 5-minute. I like longer term ones. Okay, Naren, yes, you can. I don't recommend ISAs. I think ISAs should be more long-term safe income, but this is with risk capital. So wherever your risk capital is, Naren, yes, you can. Okay, but yes, 75 pips, including additional position, 75 times $30 a pip, $2,250. Why were they doing $30 a pip? That's massive. Well, because as you become consistently profitable, you might increase it depending on your net worth. Okay, and the amount of risk capital you have, risk capital. Okay, so that's one of theirs. is another one. It's another apprentice, full disclosure, not mine, one of my apprentices, 15-minute bars. I don't like 15-minute, I like longer term. Anyway, 9 hours, 73 pips, 30 big, hefty trade. Okay, I say you start off with demo accounts and really small sizes I showed you earlier on. I won't go through every single trade. You know whose credentials I'm backed by? This guy, chairman of the Chicago Board of Trade, the world's largest exchange. And if you want proof, Harpish, did he really say this? It's in the Financial Times book and it's on the jacket cover. Gets to the heart of the matter of trading by clearly elucidating the methodologies of successful trading strategies. Methodologies of successful trading strategies. People like him are my references. People say, oh, but what about Mrs. Smith from so-and-so, which, you know, Darren Winters has, or Greg Secker has so-and-so, Mr. Jones from Manchester. No, I've got people like this, okay, who are far bigger credentialed than anybody else in the market. That's why we decided to blow competition out of the water, okay? All right, and when we gave this to, initially we gave it to 25 traders, said do any 100 trades you want using this indicator on any product, because all products trend, okay, because there's humans behind them, right? Even if there's computers trading, it's the humans who program the computers. And what we found is before the indicator in blue, after the indicator in orange, and you know why I'm passionate, Paul? It's my life's work, okay? If I was Steve Jobs, I'd be this passionate. It's that simple. This is my Apple. This is my Microsoft. That's why I'm this passionate. And I'm this passionate because it allows me, it's very fulfilling, to be Robin Hood. I get to give you the inside tips of what the hedge fund industry is doing and give it to the mass market. Right? It's like the magician's magic circle. And we found that the number of profitable trades that turned to a loss decreased significantly. The number of big losing trades decreased significantly. All right. Now, don't have to go in this, but yeah, basically 25 traders, 100 trades each. 100% of them, all of them said they had an increase in the average profits of winning trades. All of them said they had a reduction in the size of average losses. And all of them said they had an increase in the biggest winning trades. I'm not saying every trade was winning or every trade was a big winning trade. What I'm saying is compared to what they were doing before, compared to after, these were the results. We want people to go from this to this, this to this. I'm going to show you guys, I'm going to show you how to download it in a second. That's the whole point of the Pips Pareto indicator. The indicator does this. It gives you all the power. Now, there is one downside. The downside is this, because I do the mentoring in the initial group. I only allow people in batches of 25 because I'm doing the personal mentoring, and I want in batches of 25 people to get to profitability. I want to get 1,000 through the program, but I want them, and you have me for life. And there's no daily, monthly, weekly cost, and you get signed copies of my 2 most recent books just for being part of it. And the indicator shows you this. You can download it tonight and start trading alongside me tonight, and I'm going to show you some other wonderful stuff. But the downside is I only allow 25 in at a time because I'm doing the mentoring for the first 1,000 personally, and the first 1,000 for life I'll do the mentoring. And the reason is, as you'll see in a second, when I get the first 1,000 to profitability, my company has a valuation of $30 million US, which the valuation, which the venture capitalists come into, which then allows me a runway in 2 years' time to get an IPO. Anyway, I'll show you that in a second, right? I'll give you a 30-day, no quibble, 100% money-back guarantee, right? You don't have to use the indicator at all. Money-back guarantee on the cost of the indicator, 30. And then we thought, what should we price it? Should we give it away for free because we want to get to 1,000 people who are going to be profitable? When we gave it away for free, people didn't respect it because it's a snob good. Right? The more you charge, apparently, the more people think something's valuable. But then equally, I said, well, I don't want to charge people lots of money because how are they ever going to be profitable if you charge them anything more than 1,000? All right. So I thought, well, how do we get a right price where it isn't too expensive and greedy and too little that they don't respect it? Okay. So we came to what we think is a fair value. And we said, well, don't give them 7 days to trial it, or 14 or 21, 30. And Christmas and the New Year is the best time because people are the most committed and most resolved to do something. It's like weight loss programs at this time. They're the most committed to do it, and the most successful batch happens in December of each year. I love the Pips Pareto. I now spend most of my time trading, and I love that as a novice. By the way, Bhikkhu was at Barclays Bank, left school at 16, Barclays Bank in London. He's now left, he's gone to the Emirates. I now spend most of my time trading, love it as a novice. My most successful apprentice, this lady, she joined me straight out of university. I took her on as my trading assistant. Straight afterwards, after 3 years with me as my trading assistant, she went to Newton. She now manages $10 billion. So University College London, where she read English literature, my trading assistant for 3 years, Newton Asset Management, she now manages $10 billion. I'm going to take some credit for that. She's my most successful apprentice. Okay, I'm going to show you how to download it in a second. Only 25, the first 25, I need you to be passionate. All of you 25 get to keep signed copies of my most recent books, my USB. You'll have mentoring for life. There are no monthly costs, daily costs, weekly costs. There is all the data is live, real time. All upgrades are free for life. All updates are free for life. Direct access to me. We start trading tonight if you want, or whenever you want. It's high quality mentoring personally from me. Why? Because it's my baby. All right. And you go here if you want it. That's the price point we settled on because we think it's the fairest. We think it's the cheapest. That's the place you go to, okay, for it. We think it's absolutely the best financial trading program from the best financial trading person out there anywhere. All right. But I want the most enthusiastic people behind it. My job is to get you to profitability. And let me tell you a bit about what the purpose behind it is this. Okay. I think I wanted a fair way to teach people for life without any recurring charges, to be broker independent. This is not stuck on one broker. You can place the trades from these signals at any broker. I wanted it to be spun out of my hedge fund so people had those credentials. So the solution I gave was hedge fund software for the private investor to give them precise buy and sell signals. Solution 2, which is what this is, lifetime mentoring from a professional regulated hedge fund manager and a minor trading celebrity, if I may say so myself. Okay, yeah, there's going to be lots of humor in this. Daily updates, right? Lifetime upgrades are all included. No subsequent fees ever. Start with $0 in your trading account. Just use a demo account. All right, for 30 days. Keep the books if you want. All right, Christmas is the best time because you've got a bit more time. You've got a bit more commitment. This is what we called it, Pips Predator. Hedge fund trading software, lifetime personal mentoring, ultimate solution. That was the solution. And you know how it gave to birth? I met the world's leading traders. I said it was in my book, Mind of a Trader, in 1995. All right, met them back then. Step 2, I won the FT competition. I established my own hedge fund in 2004. You don't have to wait 25 years for all of this. Step 3, I launched my version 6 of it in 2020. In January, it'll be version 6, which will come out. Okay, version 6. So yeah, it built to withstand every single market condition. Nobody has been in this industry as long as me. Nobody has the credentials the same. Now, I'm not bragging. I'm saying that because congratulations, you are in. Bernard, you're in. Barbara, you are in. So is Patrick. So is Kev, you are in as well. Congratulations, you are through. Okay. Why now? The reason is I wanted people. Now people are coming to me and saying, oh, we want side gigs. We want entrepreneurial ventures. That's the nature of the world. The second reason right now is people are fed up with internet, fake, unregulated, non-trader, newbie teachers. These people aren't regulated. They're not money managers. They stick the word institute, academy, university, and they want to charge you thousands. So we thought, how do we blow them out of the water? And there's a right market. They created a market for us. Every year since 2016, when I launched version 1 of Pips Predator, and version 6 in January 2020, okay, we take on, through the year, I work on 200 apprentices in batches of 25, okay? We've now got to 750, right? My target, in case you're interested, is this. Part-time traders, people looking for side income for their rent, mortgage, or their own or their kids, top-up pension, always trade with risk capital though, okay? We want to cater to these people, or full-time traders who want to push up profits or get a job in the city, start their own fund. I'm going to show you the trading course material I've created as well. Okay, these are our advantages over anybody else who's out there. Well, actually, before I give you that, let me just show you. Let me just show you what you do, where you go. Okay, to download it. When you go to alpeshpatel.com/here, because a whole bunch of you are saying, where do we go? Where do we go? Okay, here we go. I'm going to put a sticky message, hadn't I? Okay, right. We think we have got $1 billion business. Right, and I'm going to show you how we're going to get to $1 billion in a second. For those of you who are entrepreneurs who are just interested in that part, I'll show you. Okay. Right, when you go to Alpesh, yes, it works on Mac. I use it on a Mac, and it works on PC. We'll install it for you if it takes more than 10 minutes. Don't worry if you're not computer literate. You can use it on more than one machine. Yes, you can use it on all pairs because everything trends. We know it does. If something doesn't trend, you won't get any signals. But I'll show you what gives signals. I'll also show you the app that you can use, so you can see it at any time, as well as the software. Okay, my job is going to be, at the moment for you guys, this is fixed. It's a one-off fee of 1,000 one-off fee. In future, not for you guys, it's going to be 2,000 a year for the mentoring, 2,000 a year for the indicator. I'm going to show you what mentoring I give you. It's amazing. By the way, Master or Visa card or PayPal, if you want additional security. If you want to use Amex, you've got to go through PayPal, but you don't need a PayPal account to pay by PayPal, if that makes sense. 30-day money back guarantee. All you do is email me if you want to go down that route. Okay, that's what you do there. Let me just show you how we mentor people. Well, first of all, I'll give you my advantages. First advantage we have anybody else out there. We are out there is this. The only regulated hedge fund manager. Now, given that if your ambition is to earn more than 1,000 in a year, okay, then it's a no-brainer. You would buy this. If your ambition is to earn more than £1,000 from trading in your life, you do. If your ambition is not to earn even 1,000, then you shouldn't be trading. Okay, you should give up and never trade. If your ambition is not to earn more than 1,000, then give up. Okay, now. Advantage 2, there's no ongoing subscription charges. For the first 1,000 apprentice trainees users, there is no, and you're in that first 1,000. Advantage 3, lifetime one-to-one mentoring, no extra cost. Why? Because if you're going to be profitable, you won't need me to mentor you anyway. We have a dedicated mentoring course that I created, 30-day course and a 12-week course, and a certification program, and my LinkedIn, and I'll introduce you to anybody else. Lifetime updates, upgrades, combining software and courses and mentoring as well. These are my business steps. If you're interested, you might not be. And then I'll show you in the next slide how I mentor people. Step 1, what I want to do is I want venture capital investment after the first 1,000 profitable apprentices, and we're at 750 at the moment. We're going to have a valuation of about 30 million is what we've calculated. That should be our Q4 of 2020. Step 2, global expansion, Q1 of 2021. IPO in 2022 been told, and step 4, unicorn, in other words, $1 billion valuation by 2027. That's my ambition, and I want all apprentices to have free shares in that company, subject to any legal issues. I don't think there will be. Oh, we've got a whole bunch of people who've just come through. Kavita, yours has gone through as well. I can see that. Proms, yours has gone through as well. No issues. You should be all right. Just try again on the PayPal if it's not clicking, because there's still, I think, licenses left. I think there's still a couple left. How do I mentor people? Every Saturday, you've got live webinars. 11 a.m. on stop losses, 12 o'clock on entries, 1 o'clock on limit orders, 2 o'clock on money management, 3 o'clock on trading psychology, 4 o'clock on adding to winners. Daily news emails via app and via email. 3 weekly, I show you the trades we're placing 3 times a week as well. You've got a 30-day course and a 12-week course. You can do it over live. I've created all of it, and I'll show you that in a second. In-person meetings. Live trading you can see over my shoulder because you've got the software, so you're going to see what I can see, and I'll show you what we're looking at any given time as well. So I'm looking over your shoulder, you're looking over mine. You're actually going to fill in a questionnaire like a personal trainer one, so I can see your strengths and your weaknesses, so we get you to that money goal, that profitability. Live trader community website as well, so you can talk amongst yourselves, and I answer the questions on that. I'll show you that in a second. Personal feedback and mentoring, 1-to-1. Okay, you've got WhatsApp numbers. You got Telegram broadcast chats at our app. We'll show you the trades look at, the news each morning. You get a monthly newsletter as well, but you're also getting it. It used to be weekly. Now it is daily. You're going to see what we're looking at, okay? And the news and the trades and the Skype calls as well. It's got all of that. I mean, yeah, I am bloody proud of this. We have given more value than anybody out there. Nobody comes close to the value and to the credentials, right? That's why I think it could be $1 billion business. Troy, there's a massive waiting list. The only interns we take on our apprentices, I'm afraid. There's a massive waiting list. We have got a great support team who will install it for you. 24/7 live assistance as well. Trading mentor. You got a WhatsApp number for me, apprentices. There's a direct line for apprentices. By the way, you can schedule a meeting with me. If you're not sold on this, I'm going to show you how you can schedule a meeting with me on a calendar and a phone call. That's my office at 84 Brook Street in Mayfair. Our hedge fund is domiciled out of Luxembourg. We're a British FCA regulated fund which owns the Luxembourg entity. Okay, and we also have a private equity fund out of Singapore and Luxembourg as well. Okay, so you got all of that. Basically, I am the most intimate, the most direct, the most communicative mentor you're ever going to have. This is our community site where you can see our latest views and what and when to trade, all of this stuff which tells you how to do trade selections. You got all the mentoring from the articles we've written, and it walks you through all this. Look at this. You cannot fail. But anytime you don't understand something, you just email me. You contact me. You WhatsApp me. Okay. So you've got all of that on top of everything else. It gets better, my friends. It gets better. Got a 30-day course and a 12-week course. One is to turn you from a beginner into a trader. The other one is to turn you into a hedge fund manager. Ramon, you go to alpeshpatel.com/here. You should be able to see the offer. Okay, you should be able to see the offer. You go, let me write it again, www.alpeshpatel.com/here. That's where you go to sign up and enroll. There's still a few places left. So you've got all this. Guess what? This is updated every single week. Okay, why? Because the markets are updated every single week. So you're not just paying for something and then it's gone. You're paying for it once, but you get it for the rest of your life. Why? Because I plan to be trading for the rest of my life too. You get things like Goldman Sachs's latest updates. I give you the insider tips. This alone, right? The latest videos, London Stock Exchange interview on artificial intelligence. London Stock Exchange asked me to do an interview, asked me if I didn't be interviewed on my AI, on this algorithm, and I did that with them. I mean, that's pretty high credentials, never mind BBC. I give you the Goldman Sachs outlook. I give you UBS Wealth Management, the year ahead. You're not going to get this anywhere else. You're not going to get it from, Investors Chronicle or whatever else you're looking. And then it's structured into each week. You can take your time. You can do it whenever you want. You can do it 3 in the morning because the markets are open 3 in the morning. They're open now. You can download this now and we can start trading now. You can start communicating with me on WhatsApp now. You're going to get a Telegram channel as well to see our trade. Okay. And by the way, if you want to schedule a call with me, it's alpeshpatel.com/call. alpeshpatel.com/call. If you're not sold on this, schedule a call with me. I'll talk you through it. Week 3, week 4. Okay. If you're still not sure, week 5, it goes through all of this. It gets better, my friends. It gets better. Okay. If you want to know, just in case you want to know, well, what are ordinary people saying? Not the great and the good, like the chairman of the Chicago Board of Trade. Okay, what are people saying? Well, I've put a whole load here. We've even put, just in case, their IP addresses. Okay, because sometimes, how do I net real? Okay, the material is presented clean, easy to digest way, great for me in order to understand all the detail. I've got loads, but I put a few of these up. Judy was very helpful and cleared up any download issues. Judy's the person who does the download installation. She'll install it for you, okay? Deepak Mystery, can't thank you enough for getting me in contact with me today and walking me through the downloading of the indicator. So glad your assistance. Blah, blah. I'm really impressed by Pittsburgh. It's over 30 days. Please send me the lifetime version. I'm up 175% on my demo account. I want you to start off with demo, please, but need this course as I need to learn a lot more before becoming anything like a good trader. I enjoy seeing others trade live and learn a lot from that. Thanks very much. Thank you for your commitment to help us to be successful. This is good. Thank you very much. I'm going to put loads more up there. We get so many every day. I did enjoy the opportunity to investigate your site and chance to try the indicator, for which I thank you again. Also, great extra books. I have no doubt many potential traders would likely benefit from it. Blah, 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 blah. These are regular people. Okay. But it gets even better. We've got obviously the celebrities who tell me that, yeah, you're doing a great job as well. By the way, if you want to get in touch, we've got WhatsApp there. If you want to book a schedule with me, okay, you just get mentored. You go to pitzpredator.com, get mentored, and it shows you, not sure, schedule a call with Alpesh. So pitzpredator.com, get mentored, and you can schedule a call. You'll see my calendar. And you can click on a button. It'll give you my phone number. It'll book you into my calendar, and I'll talk to you. And you might think, shit, Alpesh, that's a lot of commitment you're giving. Yeah, that's right. I'm here to get out of my comfort zone and make $1 billion technology company. And I want to get that 1,000 profitable traders, because that gives me a $30 million valuation on the company. That's why. And I think Christmas is the best time because people are committed. Also, because they're usually thinking, shit, I need to make more money in my life at Christmas time, don't they? Come on, be honest, you are. That's why I've done it that way as well. Oh, by the way, Australian dollar, New Zealand dollar, I think I mentioned it earlier. That's where we are on it, and it's tanking, so it's great. Do you notice how I said New Zealand dollar earlier and Australian dollar? And people think, what? Nobody talks about those currency pairs. Yeah, because they're the smoothest trending. We just go by what we see. Okay, we go by what we see, and that's one of the most smoothest trending things that are out there, all right? They're absolutely the most smoothest trending stuff you'll see out there. By the way, if you want to see a bit more about who I am, a lot of people don't know. They just think, oh, yeah, hedge fund manager. Actually, I work with the UK government to promote UK fintech as my company around the world. That's me with my wife in Singapore, promoting fintech for the UK company. That's us at the High Commission. I used to work in the United States Congress as well when I was an intern. I built one of the biggest, well, actually the world's largest not-for-profit organization promoting entrepreneurship. I built their UK chapter called the Indus Entrepreneurs. There it is on screen. You can see it there. Okay, so I know about mentoring and entrepreneurship. Barclays have launched my books. I'm that good. I sit on the advisory board of entrepreneurship for Downing Street. And because of all this, I've been able to do charitable things. This is British Asian Trust, which I'm one of the supporters of. That's me and my mum and His Royal Highness. And I'm a visiting fellow at Corpus Christi College, and I trained as a barrister. So, okay, if you want to know some credentials, because you're thinking, who is this guy? Where did he come from? Okay, why does he think he can become a billionaire when nobody else can? Well, actually, when others can as well, right? That's what we did. That's the credentials. And yeah, somebody just said, no, what did you just say? I just saw it. Oh, Amazon. I didn't, I mentioned Amazon earlier, did I? I can't remember mentioning Amazon. Amazon I hold for the long term. Okay, look, classic example. That red arrow, that didn't work out to be profitable, but the loss was small, short in duration. This long arrow, yeah, the green one, what a great trade. Okay, and then we doubled up here. So you see a losing trade, you see a winning trade. This is what I mean. Let's say 50% of my trades were losing, 50% were winning. Fine. The losing one is here. This is the winning one. All right, 50%. But can you see why the 50% makes loads of money? You start small because you know you're going to double up when it gets to this red dotted line. What's that red dotted line? Okay, the red dotted line, my friends, is where we're going to double up. And you can tell your broker, because you can, and I show you how to do all this. You tell them, right, I want to buy at this point. I want to buy another position at this, and its stop loss for this red dotted line as this entry point there, and its stop loss is written there, SL. Thank you, Paul. Thank you very much, my friend. I appreciate it. Rahul, yours has gone in. Mohammed, yours has gone in as well. Who else have we got? Kiran. Oh, by the way, this event's going to end in about 15 minutes. I've been on too long. Wow, I try and keep it short, and I keep talking too much. Okay, let me run through a few of the critical slides and just a few of the critical points. This is, yeah, I'm one of the good guys. I hope I'm one of the good guys. Okay, 30-day, not 7, 14, 20. You can keep the books even if you ask for your money back. These are the countries that the vast majority of our users come from. It is 25 licenses at a time. I do them in batches of 25. If I get more than 3 emails in a day, my secretary will not allow me to take on another 25. It's as simple as that. Okay, these are all the benefits. I mean, there is nobody anywhere in the world who comes close to us. And if you don't believe me, book a call with me and I'll prove it. And when I have these logos on there, well, as Paul, they always put these, John Smith, trading educator, I've seen on CNN. Bullshit. They'll never be able to show you a clip. I'll show you my clips. I had my own show on Bloomberg as well before I set up the hedge fund, okay? So I'll show you the stuff, all right? And you can see it. And FTCon, blah, blah, blah. I've gone on to all of this anyway, and the biggest banks use me. That's the book. There you see. Okay. There's a whole load of stuff. Sky News as well. Me on there, exec pay. So you got a whole bunch of benefits, not just 12-week course, 30-day course, the international best-selling books, the USB, access to my traders community where we meet physically and on the community website as well. Some great testimonials from brokers as well as the chairman of CNBC. The lid off the Traders Black Box has been found in Ruth. John Watson, co-chairman CNBC Arabia, Coutts Bank, Wealth Management, Coutts Bank, essential companion to the online trader, Barclays Stockbrokers, Charles Schwab. They're the quotes and the people who gave them, who we've worked with. These are all paying clients as well. So you've got all of that. There isn't anybody who bloody comes close. Okay, that's why we're going for it's going to be a British company which is going to become $1 billion business. Now I'm going to go because I've got a whole bunch of apprentices to deal with. I'm just going to go and take you through some more of the slides. Oh, so much information here. But anyway, there we go. That's what Financial Times created this for me. The UK's best internet trader. I said I want a flyer for mine, and they said, well, there you go. That's what it is, because that's what Channel 4 called me. There we go. On the Beeb again, and all of it. Basically, if I can't make you profitable, nobody can, and you've got 30 days in which to find out. If I cannot make you profitable, if I can't make you profitable, absolutely bloody nobody can. It is as simple as that. And let's do it there. There you go. All right. If I can't do it, nobody can. And those are just some of the reasons why. Got a chat. I know, Dwayne. Brokers, Ken, I'm going to email you the 4 brokers that I like at the moment. I'm going to email you all of those. And guys, I'm going to email you some of these slides, the most important parts of these slides, so you don't miss out on these either. So you get an email of those as well. I'm just going to go over some of the most important slides of tonight, okay, as well. I mean, nobody gives you all of this. Look at that. Okay, in the industry, 20 plus years, education online, updated daily. Nobody does that. They don't do it because they don't truly care about you, and because they don't have the incentive and motivation I do, which is, if I want to create a company worth initially 30 million US dollars and then $1 billion in 7 years, guess what? I'm going to have to do all of this and much more. Eventually, we'll get other people to do it. But you'll always have me as the first batch of 1,000 apprentices. You'll always have me as your mentor, as your tutor. Okay. We had, somebody said, what did they say? What did they say? What did they say? Oh, there we go. Yeah, it's popped up a little bit. Jonathan, sterling New Zealand dollar. Yeah, you can see it, but that's fine. It's still a short. It's still a short. We're still tons in the money there, as you can see. Okay, and you can see why we go for these kind of trends. You know, the simpler, easier ones like sterling New Zealand dollar, can't you? It's just a lot easier to do. Okay, now let me show you some of the important slides. Okay, not that one. I showed you this. Oh yeah, if you want to schedule a call with me, alpeshpatel.com/call, right? And it'll schedule a call with me, because if you're not sure, schedule a call with me, alpeshpatel.com/call. That's how confident I am that this is bloody amazing what we're showing you. And you know, the education you get on the course material is second to none. Very structured. It's got videos in bite size. It's got articles as well. Okay, so it's got all of those things. Let me go right back and show you some of the most important slides I want to take you through again. Okay, very briefly. All right, there we go. We start off with this, if you remember, and I said the top books. Take your photos if you wish, but I'll make sure I send this across to you. It's also on the website, which I'll give you in a second. All right, given that there's this much to trade, we scan all of this. We scan all of this for trends, but like I said, these are the ones I'm going to focus on in 2020, because I think because I can't focus on everything. These are the ones I'm going to focus on in 2020. I already gave you which I think are the best stocks for 12-month holding. All right. I also let you download this earlier, okay, as well, which is the Goldman Sachs. But if you can't see it, and if you want all these slides, all this information, it's on there. Any issues, just WhatsApp me there as well. Just WhatsApp me there. Okay, take a photo, write it down. All right. I don't want people saying to me, how was that again? What was that number again? Write it down. Grab a pen. You stay on this for a second. Okay, you got it. You got it. You got it. It's also on pipspredator.com in case you don't get time to write it down. If you want to know how well my stock picks have done in 12 months, this Financial Times awardee company, the URL's there, £10,000 into $250,000 from 2004 to 2016. They monitored it independently, and you can see the update there. Okay, sharescope.co.uk, Alpesh. Right, this is what I went through with you on this webinar. That's a hell of a lot I've been through. Top US stocks. I gave you these names. All right. Problem number one, you don't know when to buy and sell. We solved that. Only 25% make money. Well, this solves that. You don't know how much money's put into a trade. This solves that, because it tells you how much risk you're taking for the stop loss. If your stop loss gets hit, it tells you this is how much you'd lose. So you might reduce the amount of risk you're taking. We said that you've got very little capital. How much can you make? So I took you through a business plan. I'm going to do that in a second. I said you don't want to be a screen slave. This means you only have to be in front of the screen 15 minutes a day before and after work, because it scans the screen for you. So it removes that. You don't know who to trust. Trust me. And I explained why. Remember the business plan I took you through? If you wanted to make £10,000 for argument's sake, this is what you would do. You'd imagine on one of these trades you're making £120, but risking 80. Well, what if you had £1,000? That's an 8% risk. You could start off with £1,000, and then we broke it down. Let's say you only won 60% of your trades. Where would that get you? How could you do it? How much risk are you taking? This is how it would work out. Okay, so we worked this business plan out for you. We solved it. Now, I'd actually like you to, if you want to make more money, you'd need more capital, and you'd need to trade more frequently. Ideally, I want you to have more capital, because it's a good buffer. And I gave you a daily routine, remember, 15 minutes a day, scan the instruments, your strategy, or mine. Mine gives you the stops, the entry, and how much money to put into a trade as well. My preference is lots of capital, least leverage, go slowly, because I showed you with this broker, 39 pence a point or a pip, whether it's CFDs, futures, it all gets translated into that language. It easily tells you, brokers like this easily tell you, and I'll give you the broker list, I'll email it, check your inbox shortly. Okay, tells you where to close at a profit, and there you're risking as little as £20 a trade. Well, isn't that a good way to learn? You could obviously increase that risk if you wanted in return for your profit, but at least the software told you, right? So who do you trust? Well, I explained why it should be me. I explained to you where I got my strategy from, Bill Lipschutz's Global Head Foreign Exchange at Salomon Brothers. I also explained to you. You want a strategy which is using artificial intelligence because it's about pattern recognition. Welcome to 2020. You know what I'm saying? Okay. I also said you want somebody who's a hedge fund CEO who's written all these books and published by the Financial Times, gives you a structured course material as well, so that you've got ample support, all right, and who you can reach 24/7 by phone, computer, whatever method you want. So the mentoring is not just course material, but you can call me if you're not sure about all of this. Just call me. Call me. Schedule a bloody call. Schedule a call. All right. If you're not confident, right? I am that confident. I can convince you this is the best thing you could do, because we said only 25% are making money. So my job was to remove that problem. Only the rich are getting richer. This is my good works, my Robin Hood, teaching what the rich are doing for the masses so they can start making more. Okay, because there's too much noise from fake teachers, so we're getting rid of those. And problem number 3 we're resolving is no subscriptions. Then we went through another business plan I took you through, which was this one. Okay, and I explained that it was because of bad strategies, people weren't able to make 1,000 a month. So let's talk about strategy. We talked about momentum. And we said because when I was a poor student, I had to use multiple indicators, multiple timeframes, price confirmation, now pattern recognition as well. Because as a poor student, I couldn't have any more sophisticated strategy. And it's one of the 10 algorithm strategies we still use in the hedge fund. We then put this into an algorithm called the Pips Predator. Trialed it when I was writing for the Financial Times. I won awards in the FT. They asked me to write books. It led to fame and fortune. That allowed me to set up a hedge fund, license the software, and that then led to this idea when people kept saying, how do you teach us? How can you teach us to create, thanks to technology, all of this benefits so that people could avoid this problem, which is there were too much to do manually. Instead, we automate, and that allows us to give people within 10 minutes of installation a simple approach to trading. We called it Pips Predator. And there you go. It is yours with all the benefits that nobody else anywhere in the world gives you, and turns people from that to that. And here we go. There it is. Okay, guys, I'm going to deal with my apprentices unless there's any more questions. Okay, I want to thank you all. The live event's about to end. It's been on the screen for way too long. There's Uber, trader the bloody century. We've had this for a while, actually. People often ask me, how long do you holding things if it's a 1 hour time frame? 1 hour time frame is the best if you're got a day job, because look, this was a buy signal on the 11th of December. It is now being held for what, 2 weeks, okay, almost, and the trend's there. So that's the great thing about it. But you know, we had 2 losing trades before, small in size, short in duration. That doesn't matter, because this is the killer one, and that's what happens. Sometimes you're only right 30% of the time, but the 30% you're right makes you a shed load of money, especially, by the way, if it's preceded by 2 losing trades. The chances are the next one is really going to catch a trend. Okay, it's what we found in my experience as well. And so we try and highlight those even more so. Okay, guys, I'm going to have to go. I'm going to leave you with this. I want to thank everybody who's been on this webinar. I want to thank everybody who's been part of all of this. Oh, there's a few more polls I want to do. Okay, let's start this poll. Have you used a trading apprentice? Let me know. Let me know. Have you used a trading mentor before, rather? Have you used a trading mentor? Answer that question. Thank you, Chris. Thank you, PJ. Carolyn, thank you. Sylvain, Dwayne, Ken, Paul, David, Troy, Catherine, Naren, all of you. Thank you all very much, my friends. And I want people to say, you know what? None of you used a trading mentor. Well, oh no, some of you have. So listen, I think I'm pretty bloody good at that. So, you know, hopefully you're going to have me as the best trading mentor possible. I'm going to send you a repeat of this as well. Got another chat. Thank you, Mike. Merry Christmas. Happy New Year to everybody as well. Okay, delighted with you all. Oh, by the way, give me a shout out if you others who've signed up, in case I've missed you and haven't answered everybody. Okay, so 30% have used a trading mentor. I think more should, but I think it should be me, because I think I'm the only one out there. Well, I know I'm the only one out there who's a regulated hedge fund manager. Nobody else is. So if you've used one before, you've not used a proper one. I can guarantee you that you have not used a proper one. Okay, let's do another poll. Let's do another poll. Right, start, and let's look at this one. Let's look at this one. All right. What's your biggest trading challenge? Stops, entries, when to take profit, psychology, how much money to risk. The live event is about to end. I've been on air for way too long. Want everybody to have an incredibly prosperous 2020, okay? Especially my Pits Predator users, you're going to be profitable. That's my job, to get you into that category and that group. Dwayne, I know I am. Thank you, my friend. Derek, thank you as well. You can see the polls. I'm going to end the poll in 5, 4, 3, 2, 1. Ending the poll now. Okay, when to take profits? Well, guess what? The indicator has a trailing stop loss, tells you when to get out, or it has a red cross, which tells you when the momentum's run out. If you're going to be in front of the screen, you use the red cross. If you're not going to be at the screen, you just have a trailing stop loss, and we teach you how to do that. Entries, it tells you when to enter. It even sends alerts to your phone, so that's easy. Psychology, not an issue, because you're following an indicator. The computer takes the strength. Okay, stops, trailing stop loss. I cannot imagine what else is a problem other than those things. Okay, I think got time for one more poll. Let me see, which one can I give you? Let's start this one. What do you trade the most? Stocks, indices, forex, commodities. By the way, we use the indicator on absolutely everything. Okay. I'm being asked about, what am I being asked about? A few questions. FTSE. Yeah. Oh, you want the longer term perspective on the FTSE? Let me put it on the 4 hour. Wow. Okay. Well, this is not a trade we've got open, the 4 hour, because we don't trade the 4 hour on the FTSE, but this is the long term trade on the FTSE. Okay. This is the buy position on the FTSE. That's the long term. That's not